Okay, say this question. Question number 11. ABC Tech Limited is a registered business under GST in Karnataka, engaged in manufacturing and sale of electronic goods. Due to a strategic merger, ABC Limited decides to cancel its GST registration effective from 31st January. This is related to 29 subsection 5, cancellation of registration. The company has been operating for 3 years and availed the various input tax credit on its purchases during the period. With effect from 31st January, they are cancelling, which means we need to take the closing stock as on 30th January and we need to reverse the ITC. So because of 29 subsection 5, following are the stock and capital goods details. Inward supply, raw materials, so purchased prior to 30th January 2024, 1 year, and we don't have any time limit. Only for availment of ITC we need to see as on the closing stock date, the input should have been purchased within 1 year. But in case of reversal of ITC, we don't have to check that. So whatever is the ITC availed, that we will reverse. So transaction value at the time of purchase was 8 lakhs. 8 lakhs into 18%. So 8 lakhs into 18%. That is how much? 8 lakhs into 18%. 1,44,000. Or we need to compare it with the transaction value. What is the transaction value? 10 lakhs. So 10 lakhs into 18%. Because of 29 subsection 5, we need to take first whatever is the ITC availed or the sale value of such inputs, whichever is higher. How to determine this value? As per rules. So therefore we need to do the comparison. What if the same question is under 18.4? So if the same question is under 18.4, this will be ignored. We will not take it into account. Just the ITC availed will be reversed. But if it is 29 subsection 5, we will reverse or we will compare it with what is the GST payable if such inputs are sold. So therefore 10 lakhs into 18%, whichever is higher, we will be taking 1,80,000. Then here 5 lakhs raw materials in semi-finished goods, 5 lakhs into 12%, so that will be 60,000, and we will compare it with so GST payable on sale of such inputs, if any. So what is the GST payable on sale of such input? They are not selling it. If they are selling, what is the value? So 3 lakhs into 12%, that is 36,000. Whichever is higher, definitely it will be 60,000. Then 4,50,000 raw materials in the form of finished goods. 4,50,000 into 18%, 81,000, or 4 lakhs into 18%, whichever is higher is 81,000 only. Last case, capital goods. For capital goods, how much is the ITC to be reversed? ITC availed divided by 60 months. So that is 20 lakhs into 28%. That is 5,60,000 divided by 60 months into balance life. What is the balance life? We used it for 1.5 years, which means 18 months we have used. So therefore the balance, that is 42 months, we need to reverse. So divided by 60 into 42. Please see how much you got. 3,92,000, or the sale value, if that particular capital goods are sold, what is the GST payable? 15 lakhs into 28%, that is 4,20,000. Whichever is higher will be taken. So which is higher? 4,20,000 only will be higher, and that will be taken as the GST payable in this case. So for inputs, accordingly we need to determine, and for capital goods also we need to determine, and whichever is higher should be taken into account. Okay, so that is with respect to this, and this is in case of 29 subsection 5, because the provision says, so they need to compare it with the tax payable on such goods, whichever is higher. This whichever is higher point is only speciality in 29.5, which was not there in 18.4. That's the only difference between 18.4 and 29.5. And this much of ITC needs to be reversed. So if they have enough balance in the credit ledger, they will reverse. If they don't have the balance, they have to make the payment. So right, reversal or payment as the case may be. What will happen to the excess balance? The excess balance shall be lapsed. Question number 12. Mrs. Triveni Tech Solutions, located in Pune, Maharashtra, had a total GST liability of 90,000. 45,000 CGST plus 45,000 SGST for July 2024. The due date to file GSTR 3B was 20th August 2024. Mrs. Triveni credited 60,000 to its electronic cash ledger on 20th August. So for the month of July, what is the due date? 20th August. As on 20th August, 60,000 got credited out of 90,000 liability. So they have a liability of 90,000, but what is the balance available in the cash ledger as on the due date? 60,000. And the balance 30,000 was credited to the electronic cash ledger on 24th August. The return was filed belatedly. The return was filed belatedly. You change it to 30th August. The return was filed belatedly on 30th August, and entire 90,000 was debited from electronic cash ledger at the time of filing. You are required to compute the interest payable under section 50 subsection 1 of CGST Act, read with rule 88B and its proviso, assuming interest rate is 18%. Now what is the total liability? The total liability will be 90,000. How much is credited as on the due date of GSTR 3B? 60,000. Means on that 60,000 no need to pay interest, whereas interest may arise in case of 30,000. But in that 30,000 what they are doing, they are crediting it on 24th August. Even though they credit it on 24th August, but the interest will be computed till 30th August. Why till 30th August? If there is no balance in the cash ledger as on the due date, then the interest will attract. The proviso says interest not payable if sufficient balance is maintained in the cash ledger as on the due date. So the proviso itself is not applicable. If the proviso is not applicable, then we need to go by the section. Section 50 subsection 1 says, in case of delay in filing 3B, the interest will be computed from the due date, that is the first date after due date, till the actual date of payment. What should be considered as the actual date of payment? Date of filing 3B. It's not the date on which you deposited into the cash ledger. Date of filing 3B should be taken in this case. What is the date on which 3B is filed? 30th August. Even though they deposited by 24th August, but interest will be computed for 10 days. How 10 days? 20th August to 30th August. So the period will be 10 days. So therefore interest is not computed for 4 days till 24th August. Interest is computed for 10 days. So see this. 30,000 return filed and payment made on 30th August. Delay in filing. So what is the delay in filing? 10 days. So we need to take 10 days as the delay in filing. Correct? 20th August to 30th August. So interest will be computed for 10 days. Interest is payable for 10 days from 21st August to 30th August because the payment was deposited on 24th and debited on 30th. But the amount was not available as on the due date. So interest calculation will be 30,000 into 18% into 10 by 365. 148 rupees will be taken as the interest payable in this case. So remember, it's not for 4 days. We need to compute the interest for 10 days. Okay. And next. So even though it got credited on 24th August, but interest is payable because it was not there as on the due date. Next, question number 13. So this question is related to that interest computation. Look into question number 13. Tech Solutions Private Limited, supplier in India, manufactures high-tech sensors and microcontrollers. The production cost of a sensor is rupees 1000 and a microcontroller is rupees 800. Tech Solutions Private Limited sells these components to Electro Incorporation Limited, recipient in Singapore. Tech Solutions Private Limited is not selling these sensors and microcontrollers to any other person as they signed an exclusive contract with Electro Incorporation Limited due to their related party relationship. First, they are manufacturing high-tech sensors and this is the production cost. This is the price at which they are selling? No. Tech Solutions, they sell these components in Singapore and they are not selling this to any other person. So they are selling it to one related person, Electro Incorporation recipient in Singapore, and they both are related. Tech Solutions Private Limited provides a discount selling sensors at 1200 and microcontrollers at 1000. Electro Incorporation integrates these components into sophisticated electronic systems and provide consultancy services related to the integration. Now, Tech Solutions Private Limited has provided corporate guarantee also. So, to Electro Incorporation for a loan facility, this is another transaction, corporate guarantee transaction. With respect to the first point, what should be taken as the value? That is this sale of these sensors and microcontrollers. Number one, it is a related party transaction, so we need to determine the value as per rule 28. Open market value is not available in this case. So we cannot take 1200, 1000 as the open market value, and also 1000 and 800 cannot be taken as open market value because that is the cost. and they are not selling it to any other person. So we cannot take that as the open market value. And there is one provision, if recipient is eligible for full ITC, the value declared in invoice will be taken as the open market value, but that point is not given here because the recipient is outside India. How they will be able to take the ITC? They cannot take ITC. So recipient not eligible for full ITC. So that point fails. Then if open market value fails, what is the next one? Like kind and quality. Like kind and quality, what will be taken? We don't have any information about like kind and quality. That also fails. We don't have, because we don't have any other transaction. They are not at all selling this to anyone. So we don't have the transaction. Fine. Then we go for cost plus 10%. What is that? Cost plus 10%? That is 1000 plus 10%, 1100. 800 plus 10%, 880. That will be taken as a value. Sir, can't we take the resale price into 90%? No, because they are not selling it as such. You see there, what they are doing, they are integrating these components into sophisticated electronic systems and provides consultancy services. So resale price into 90% also cannot be taken in this case. So the only way is cost plus 10%. So that is the answer for the first part. So in this case, 1100 and 880 should be taken, that is rule 30, cost plus 110%, 110% of the cost. So we need to give the details accordingly. And first you need to write the rule. After writing the rule, you need to tell that why in this case resale price should not be taken, and thereafter, as there is no information about market price, OMV cannot be applied. So we are going with rule 30 like that. Okay. Next, look into the second paragraph. Tech Solutions Private Limited has provided corporate guarantee to Electro Incorporation for a loan facility of 50 crore taken from Global Bank Limited Financier to fund the integration of components into electronic systems for a period of 3 years. The guarantee implies that if Electro Incorporation defaults on the loan, Tech Solutions Private Limited is liable to repay the loan. This guarantee impacts the financial terms and overall risk assessment of the transaction. However, Tech Solutions Private Limited has not got consideration, so it's a related party. So therefore, we need to take the value as what? 1% of the guarantee offered. So what is the guarantee offered? 50 crore. So 50 crore into 1% for a period of 3 years. No, because the recipient is located outside India. So therefore, rule 28 sub rule 2 should not be applied. Rule 28 sub rule 2 will be applied only when the recipient is located in India. Here the recipient is located outside India, even though it is a corporate guarantee. So rule 28 sub rule 2 will not come. Then it will be rule 28 sub rule 1. So therefore continue further. However, if Tech Solutions Private Limited gives such guarantee to any other person, they charge a one-time fee of 0.5% of the loan amount as guarantee commission. So we have open market value or like kind and quality we have. So as per rule 28 sub rule 1, we don't know that date. So open market value we don't have, but like kind and quality we have, because usually how much they charge for giving the guarantee commission? 0.5% of the loan amount. So therefore 50 crore into 0.5% will be taken as the value. So you can see here the value as per rule 28 to a related person is not applicable if the recipient is located outside India, but it is a related party transaction. So we need to take the like kind quality. Why are we not writing it as OMV? OMV should be on the same date. Here it is not on the same date. Usually they charge like that, it is given. So that's why we are taking like kind and quality, and 0.5% of the loan amount. So 50 crores into 0.5%, 0.25 crores will be taken. Got it? Then next one. Question number 14. So many times I get a doubt. Why do CA final students fail? Okay. And I got the answer many times in my classes itself. So it is all about the dedication. I charged 500 rupees. Total 88 students. Now we have seats only 80 seats. So but we allowed some extra students also. So total 88 to 90 students paid. Now you see the classroom. Okay. And next, online live also. So first day it was some 300 students were there. And today some 30 students are watching. Okay. 10%. So that's where the result is. You understood? It's all about the last person will win. It's like a race. Everyone is running in the race. But not everyone. It's like a marathon, I can say, rather than calling it as a running race. Because in marathon, it's all about the consistency. to what extent we are consistent in our efforts, that much winning we will be nearing to. So dedication is known many times. So because thereafter I got my answer. Why it is like that? Because fat in the buttocks, that they cannot attend the classes also, even though they pay fees. Even though they pay fees. Why? We will see later. It's okay. What he is going to teach extra. So it will see later. That later procrastination will take you till the exam. And in the exam one day before, sir, do some marathon, sir. We will try to clear it, sir. They will try, but definitely it will not happen. God is there, yeah. God is there. Definitely God is watching everything. So those who are sincere, those who are not sincere, he is watching. So is the result. Simple. There is no other point. To what extent you are dedicated. Already I told you this point in the last class also. If you are dedicated, result is yours. Trust me. Okay. Then question number 14. Novacart and TerraLink. And if I am not doing Mighty 50 na, they would have killed me by now. Mighty 50s are Mighty 50s are Mighty 50s are Mighty 50s are like that. You know. So do it, sir. Do it 3 months in advance, sir. For May exam now only you do, sir. Like that they are asking. For May exam. Still Jan exam itself did not happen. For May exam you do now itself, sir, like that. No, because they want all the resources to be ready, but they will not use that resources. Okay. Question number 14. Novacart and TerraLink are e-commerce operators registered under the ONDC network, and basically in ONDC network multiple e-commerce operators are connected, and TerraLink seller side e-commerce operator. So basically Novacart, TerraLink, and TerraLink is the seller side e-commerce operator, sells taxable goods directly to Flora Limited registered buyer who places the order via Novacart, that is buyer side e-commerce operator. So basically we have a seller, and we have sellers side ECO, and then we have a buyer and buyer side ECO, buyer side e-commerce operator. And who is the seller side e-commerce operator? Measures TerraLink. Measures TerraLink is the seller side e-commerce operator, and Novacart is buyer side e-commerce operator. Novacart is buyer side e-commerce operator, and both e-commerce operators are involved in the transaction. Now what happens? Who places the buyer is Flora Limited. Flora Limited is the buyer who places the order, and that order is transferred to TerraLink. TerraLink will take the product from the seller and deliver it to the buyer. Now supplier side e-commerce operator, TerraLink itself is the supplier of the goods. So who is the seller? Measures TerraLink. TerraLink is the supplier as well as supplier side e-commerce operator. Both are same. Now we discussed one clarification. When there are multiple e-commerce operators involved in the transaction, the seller side e-commerce operator will deduct the TCS. However, if the seller and seller side e-commerce operator are same, the buyer side e-commerce operator will deduct the TCS. So therefore TCS will be deducted by Novacart in this case. The transaction details: Messrs. Flora Limited pays 95,000 to the buyer side e-commerce operator. So Flora will pay 95,000, and Novacart deducts platform fee 6% and remits the balance to supplier side e-commerce operator TerraLink. Applicable TCS rate 0.5%. Now you are required to determine who is liable to collect TCS under section 52 in this transaction. First you need to write about the clarification. Then in the present case, as seller and seller side e-commerce operator is same, the TCS will be deducted by Novacart. So Novacart buyer side e-commerce operator is liable to deduct TCS under section 52. Like that we need to write the paragraph. Then second, calculate the amount of TCS showing the detailed workings. So what happens? First 95,000 rupees will be paid by the buyer, and we don't have any information about the plus GST, minus GST, etc. So 95,000 rupees is only given. We don't have the information about the GST. So we will take this 95,000 as excluding the GST, and platform fee deducted by Novacart 6%. So 95,000 into 6%, 5,700. And TCS will always be computed on value. What is the value? 95,000. So 95,000 into 0.5%, that is 475, that will be deducted. Balance is the amount remitted plus the applicable GST, whatever is the GST that has to be remitted, of course, towards the value. This is what they need to remit. They have not given GST. If GST is given, you just take the GST separately, that also to be remitted. Okay. This is with respect to how the money will be remitted. What if in this case, you know, the seller is different and the seller side e-commerce operator is different? Then in that case, the seller side e-commerce operator will deduct the TCS and buyer side e-commerce operator will deduct the commission, and seller side e-commerce operator also will take the commission, and seller side e-commerce operator will remit the TCS. But always, whatever the case may be, TCS is not computed after deducting the commission. TCS is computed on the value of supply excluding the GST. That is with respect to this. Then question number 15. Messrs. Herbal Glow Naturals LLP, a registered GST supplier, is engaged in manufacture of herbal personal care products in the state of Maharashtra. The entity has provided the following details for the month of March 2025. Transaction details for March 25. Outward supply of herbal face cream 2.5 and the value will be 40 lakhs exclusive of GST. Outward supply of hair oil 6% and 6% 80,000. They gave a lot of data. Then inward supply data is given, inputs, input service and capital goods. So outward supply data is there, inward supply data is there. Now if you observe, for herbal face cream, the rate of GST is 5%. But the inputs rate, you see, inputs rate 6%, 5% and 9%. Definitely it is inverted or non-inverted? It is inverted. How it is inverted? The rate of GST on output is less than the rate of GST on input. So therefore it will be coming under inverted rate structure. In case of inverted rate structure, so what will happen? They need to pay GST. That means they will get the refund. They will get the refund of IT. Both are same only, no? Correct. One-on-one we should have, one-on-one we should not take. We should take it as in total because all the inputs together. So we don't have to take it as one-on-one. First we need to do the computation of total because the rule says the total. So first we need to take the total. Adukapprama we should compare it with the value whichever is higher. Okay. Okay. Fine here, live, I think it is back. We just changed the internet. There was internet issue. And I did not discuss anything. I just gave the break. Don't worry. And see this question. So first part in this is what if realization of proceeds is not there? So if the proceeds are not realized within the time limit under FEMA, then whatever amount that we have claimed as refund, that we need to pay. Suppose if some amount is realized, proportionate to that amount not realized, we need to pay. So therefore 12,50,000 plus applicable interest. Second, what will the refund be recovered if RBI writes off the unrealized export proceeds? So definitely that will not be realized because we have one provision which says that as per Proviso 296, if RBI writes off the realization requirement of the remaining 25 lakhs on merits, then the refund shall not be recovered even though the sale proceeds remain unrealized. In this case, RBI issues a write-off letter for the remaining 25 lakhs because tomorrow department will definitely ask. Department will ask like you did not realize the proceeds, so therefore submit the BRC or you submit at least the RBI write-off letter. Any of these things you should submit, otherwise we will do the recovery under erroneous refund. So that RBI write-off letter is to be produced. Then third part, can Agora Limited reclaim the refund amount if the pending export proceeds are realized after deposit of refund with interest? Assume if the remaining 25 lakhs is realized on 15 January 2025. So this reclaim refund is possible provided within the time limit given by RBI. The time limit given by RBI is 6 months. After FMR time limit, there is a 6 months time limit given by RBI. Within that 6 months time limit, if you are able to realize the proceeds, and as soon as you realize the proceeds within 3 months, if you intimate it to the department, so then whatever refund that you have paid, that you can reclaim as refund. So see the answer. If the pending 25 lakhs is realized later and the refund amount proportionately was already deposited, then Agora Limited can claim a refund of the recovered amount up to the extent of realization, provided the realization happens within the RBI permitted extension. What is the RBI permitted extension? 6 months. That's not there here. That's given in, this SPOMA. It is given in that. So law paper, and 2 points are there. So time limit under FEMA is 9 months from the date of export, and thereafter RBI time limit is 6 months. In IBS they will connect that. Okay. And next, a refund claim is filed within 3 months from the date of realization. So as soon as we realize the proceeds, within 3 months we need to claim the refund. If the remaining 25 lakhs is realized on 15 January 2025, Agora Limited must file a claim for refund by 15th April 2025. So what is the date on which they are realizing the proceeds? They are realizing the proceeds on 15th January. So 15th January means, so February, March, April. By 15th April, they need to make an application for reclaiming of that refund. Okay. Then related to that 11th question, so even one online student also asked. So again I am repeating that 11th question. We should not see the inputs individually, input by input. First you need to take for all the inputs as such held in stock, inputs in WIP held in stock, inputs in FG held in stock, whatever is the ITC that is availed, that needs to be reversed, or GST payable on the value of such inputs if sold, that should be taken. So this is how it is given in the rule. Item wise they have not given. So therefore we need to calculate group wise. So when you calculate it group wise, so then we need to see the value of all the outward like inputs if it is sold. So that we need to take together, and then we need to compare it. So that's what we did in the answer. So you can see here 8 lakhs into 18%, 5 lakhs into 12%, 4 lakh 50 into 18%. First we have taken this, and that is 2 lakh 85. Or GST payable on such goods, that is 10 lakhs plus 10 lakhs into 18% plus 3 lakhs into 12% plus 4 lakh into 18%, 2 lakh 88, whichever is higher. But for capital goods, why we are not doing like that? For capital goods, we have a separate proviso. So in the rule, if you see, it is given like a paragraph, and then for capital goods, a separate proviso is given, provided that if capital goods are purchased, like this, you need to calculate like that, it is given. That's why for inputs one computation, for capital goods another computation. So this is the way in which you need to do. And so this particular point, you might not have read it. So only in my regular batch and in my exam oriented batches, I will be stressing about this, and I will show the bare act and I will explain about it. But this is how it should be done. Then next. Question number 17. Question number 17, you see, Imperial Manufacturing and Exports Private Limited, IMEPL, is registered under GST in the state of Gujarat and is engaged in both manufacturing and trading of goods. The company supplies goods both domestically and internationally. It exports goods without payment of tax under a LUT. So they are going for LUT option, means no need to pay GST. In accordance with the provisions of section 16(3) of IGST Act, IMPEL provides the following details for the tax period May 2025. Details of the supply made, taxable value of the goods alpha supplied within India. So what is the treatment of this 18 lakhs? We need to pay GST, and this is normal domestic turnover. Taxable value of goods beta exported without payment of tax under LUT. However, the taxable value of such goods when supplied domestically in similar quantities is 7,50,000. So what we need to do? 7,50,000 into 1.5 or 12,50,000, whichever is lower should be taken. So because we need to compare the FOB value declared or the invoice value or 1.5 times the similar value, whichever is lower. So therefore 7 lakh 50 into 1.5 is how much? 11 lakh 25,000 or 12 lakh 50, whichever is lower, that we will take 11 lakh 25,000. First case we will take 18 lakhs. In the second case we will take 11 lakh 25,000. Third, taxable value of goods gamma, that is also exported without payment of tax under LUT. However, taxable value of such goods when supplied domestically in similar quantities is 2 lakh 25,000. Again you take 2 lakh 25,000 into 1.5. Definitely it is more than 3 lakhs. So whichever is lower will be 3 lakhs. And so we have got 2 export turnover, 1 domestic turnover, and we need to compute the refund of ITC on account of zero rated supplies. Input tax credit availed for May 2025. ITC on capital goods don't consider, because while computing the refund of unutilized ITC on account of zero rated, we should not take capital goods. ITC availed on inputs 4 lakhs. ITC availed on input services 2 lakhs. So therefore, to the extent of 4 and 2, 6 lakhs we will be getting. So do the refund formula. Maximum refund equals to net ITC. What is the net ITC? 4 lakh plus 2 lakhs. 6 lakhs will be taken as net ITC into zero rated turnover. What is zero rated turnover? 11 lakh 25,000 and 3 lakhs. That is 14 lakh 25,000. So you can see here net ITC. So what is the net ITC here? So 6 lakhs is the net ITC, and into zero rated turnover. What is the zero rated turnover? 14 lakh 25,000 is the zero rated turnover, divided by adjusted turnover. Numerator denominator should be matching, which means that when you take in numerator 11 lakh, denominator should also be 11 lakh 25,000. Got it? So 18 lakhs plus 11 lakh 25,000 plus 3 lakhs. For denominator don't take 12 lakh 50. For denominator also you should take 11 lakh 25,000 only. So 18 plus 11 lakh 25,000 plus 3 lakhs, the total will be 32 lakh 25,000. So 2 lakh 65,116 will be taken as the refund. But there is one point, that is all inputs and input service and capital goods are used in the manufacturing process, and all conditions for availing ITC have been complied. Balance in credit ledger at the time of filing refund application is only 2 lakhs. So refund as per formula 2 lakh 65,116, and balance in ITC at the time of filing application for refund. Balance in credit ledger for the month for which we filed, that is May 2025, after filing 3B 4 lakh 50, but we need to take whichever is lower as the refund. So therefore whichever is lower of these 3 will be 2 lakhs. Therefore refund of ITC is only 2 lakhs in the present case. Understood? Next one, question number 18. Messrs. Edu Global Limited, a company registered in the UK, provides online educational courses, recorded and downloadable content to individual consumers, unregistered persons in India. Turnover from Indian customers in March 2025 is 15 lakhs. GST rate applicable is 18%. Determine who is liable to pay GST and compute the GST liability and mention the return to be filed. What should be taken in this case? First, what service it is? OIDAR service. Why OIDAR service? Any service which is provided over internet, and in the absence of internet the service cannot be provided. See, just now without internet they were not able to attend the class na. So that is a OIDAR service, and but I am not charging any amount for that. So therefore it is not a supply. If I charge money, then it will be coming under OIDAR service. But we are talking about import of OIDAR service. First, OIDAR service is common, meaning is common. But in case of import of OIDAR service, is it import of OIDAR service? Yes. And imported by NTOR? Yes. Why? Who is NTOR? Any unregistered person importing for other than business or commerce, or any purpose. Any purpose. Not necessary other than business or commerce. Even personal purpose or business purpose. If they are an unregistered person or a registered person who is registered only for deducting TDS, they will be treated as NTOR. So in this case, imported by unregistered person. So who will pay GST? Edu Global Limited outside India will pay GST as per section 14 of IGST Act. Section 14 of IGST Act. And they have to pay GST. And we don't have any intermediary information. Otherwise the intermediary will pay. And what is the GST liability? 15 lakhs into 18%. That is 2 lakh 70,000 is the GST liability. And what is the return to be filed by OIDR supplier outside India? GSTR 5A. Very good, sir. GSTR 5A. And that is to be filed by 7 days from expiry of registration, 20th of the month following every month. No. That is NRTP. Usually we get confused between NRTP and OIDR. That is NRTP. GSTR 5. But 5A is like 3B return. That is 20th of the month following every month. Got it? So they will not ask the due date of return directly. They will connect it like this. Because they all know that students will ignore some chapters and go for exam. That's why those chapters from which we ignore, they connect it like this as one small point. So in this case, first we need to write about section 14, and supplier outside India is liable to pay GST 2,70,000. They need to file GSTR 5A and due date will be 20th April of the subsequent month. That is March, so 20th April. Playnet Limited, based in Malta outside India, offers online gaming service. Have remote. So Playnet Limited, based in Malta outside India, offers online money gaming service. Example, online poker tournaments to both registered and unregistered users in India. Now in case of online money gaming from outside India to India, whether liability to pay GST is on the supplier or recipient. If it is online money gaming from outside India to India, in India it can be any person, whether it is registered person or unregistered person, always the supplier will pay. See, not like OIDR. OIDR, if they are providing it to unregistered persons, then only it is FCM, otherwise it is RCM. But online money gaming, not like that. Online money gaming, always it will be FCM by the person located outside India. So in this case, the Playnet Limited, which is based in Malta outside India, should pay GST, and turnover from Indian customers 30 lakhs. GST rate is 28%. So 30 lakhs into 28%. So that will be taken as the GST liability. And who is liable to pay? Playnet. And GST liability we can compute. Specify the return. Same return. OIDR supplier and OMG supplier, both are required to file the same return. That is GSTR 5A to be filed by 20th of next month. So the same 5A return by 20th of April, 30 lakhs into 28%, 8,40,000. So whether they are providing it to any person, registered or unregistered, the supplier outside India only will be liable to pay IGST. Then next one. So this is related to 14 and 14A. They can make a question like this, because 14A high time. So it was amendment long back, but they did not test it. So definitely they will be connecting. Then rapid traders registered under GST in Karnataka, engaged in the supply of electronic goods, failed to file GSTR 3B returns for the period April 2025 to June 2025. The proper officer issued a notice under Rule 100 but received no response within the stipulated period. So notice was given so he did not file the return, he filed the return, failed to file the return. That's the reason why a notice has been given. Okay, and notice will be under GSTR 3A. Notice is GSTR 3A, and in pursuance of notice under GSTR 3A, if he did not file return within 15 days. So whenever you are not filing return, one notice will be issued in GSTR 3A. After that GSTR 3A, what is the time limit within which you need to file the return? 15 days. Within 15 days, if you are not filing the return, they will initiate best judgment assessment under section 62. Okay, so that's what they did. They initiated best judgment assessment under section 62 based on the available records, that is invoices and e-way bills. Now, reported outward supplies 60 lakhs April 2025 to June 2025, means GSTR 1 we would have filed, maybe 3B we would not have filed. Then, or we would have added the invoices in one also not filed. Still the data is captured by the department in 2A. So actually in your 2A, you know that supplier just adds the invoice, it will be reflected. Not necessary that he need to file. So if he adds the invoice, the data will be captured. Okay. So therefore data is available with the department, or even they will take the bank statement and based on that also they will calculate. Applicable GST rate is 18%. Due date of filing 3B for June is 20th July. Best judgment assessment order issued on 10th October 2025. Rapid traders files the pending returns on 5th November 2025. within 60 days from the order. We discussed this point in best judgment assessment under section 62. That is, after best judgment assessment order, within 60 days, if you file the returns, that best judgment assessment order will be withdrawn. It will be withdrawn, and you need to pay the late fee for delay in filing returns plus interest and whatever applicable taxes as per the returns that you need to pay. Now, based on the above facts, answer the following. Can the proper officer proceed with the best judgment assessment under section 62? So, is it possible? Yes, he can. So, why he can? In pursuance of notice, if the returns are not filed within 15 days, the best judgment assessment order can be passed. About that section 62 you need to write. That is the answer for the first part of the question. Second, what is the GST liability determined under best judgment assessment? Simple, how much liability they reported? 60 lakhs, and based on invoice and e-way bills they are able to get it. So 60 lakhs into 18%. What is 60 lakhs into 18%? That is 10 lakh 80,000 will be taken as the GST, CGST, SGST, like that there is a breakup. So 10 lakh 80,000. Third part of the question, will the assessment order be withdrawn if rapid traders file the return? Yes. If they file the return within 60 days, the best judgment assessment order will be withdrawn and the tax will be payable as per the returns. So that point we need to write. So within 60 days from the best judgment assessment order date. What is the order date? See there, order date is 10th October. 60 days from 10th October you count. So in October 21 days, and in November it will be 30 days, and balance days in December. So that is how many days pa? 9th of December. But here 5th of November is within that time limit itself. So therefore assessment order is withdrawn, but interest and late fee remain payable. Which late fee? The regular late fee. What is that regular late fee? 25 rupees per day for every day delay, subject to maximum, depends, 1000 rupees or 2500 or 5000. If their aggregate turnover during the previous year exceeds 5 crores, then 5000. If their turnover during the previous year does not exceed 1.5, then 1000. If it exceeds 1.5 but does not exceed 5, 2500, like the 3 slabs we have. This is for CGST Act. The same will be payable under SGST Act. That will be the late fee that will be payable in this case, and interest will be as usual. Next, what is the interest payable on delayed payment? Compute interest till 5th November 2025 because they are filing returns on 5th November. Now, actually speaking here, tax payable will be 10 lakh 80,000 and due date for June 2025, GSTR 3B 20th July. But here we don't have the information about, this pertains to which period. The breakup is not available. If the breakup is available, then only we will be able to compute the interest exactly. So otherwise we go by the assumption here. What is that? This 60 lakhs pertains to June month, and accordingly 20th July will be taken as the due date and 5th November is the payment date. So therefore there is a delay for 108 days and for which interest will be payable, because we don't have exactly for which month what is the liability, like that. Okay, and what they will do, even practically also they will file all nil returns for that period. Last month only they will put, because they wanted to minimize their interest burden, so they will try to do like this. Then next, what happens if the returns are filed after 60 days but within 120 days? Assume filed after 75 days. Then first 60 days if the returns are filed, no issue. Thereafter there is an extension period of 60 days, but in that extended period of 60 days if you file the returns, you need to pay 100 rupees per day for every day delay. There is no subject to maximum, 100 rupees per day. So in this case the normal late fee is also there for 75 days. In addition to that, there is an extra late fee under this section that will be 100 rupees per day for 15 days. Say this. If returns are filed between 61 to 120 days after the order, assessment can still be withdrawn. Assessment order can be withdrawn, but the registered person must pay an additional late fee of 200. That is 100 under CGST, 100 under SGST for the extended period filed after 75 days. So additional late fee for 15 extra days will be 15 into 100, 3000. But this is in addition to the regular late fee. So regular late fee is also payable in this case. So this is a question on best judgment assessment under 62, mainly involving that late fee computation. Okay, that 60 days, beyond 60 days. In exam they can ask even regular late fee point also combined with this. Then question number 20. Question number 20. See, these are all the areas, if you observe, some areas which usually are probable to be tested because of the amendments in the past, but not tested. That only I have made as mighty 50 questions. Okay, so nothing else. And see, simple, from last 1 year, 1.5 year, lot of amendments are there. Some amendments are tested. What every student will focus, the recent amendments only they will focus, but the old amendments and all they will not think. Okay, those are all not important like that, but those are also possible, probable, not tested in exam, can be tested in exam. Okay, then next one, question number 20. JAN'26 Technologies Private Limited received a notice under section 65 on 10th May 2025. So for the department audit, 65 is department audit, 66 is special audit, 65 department audit. That's why I will be asking the students to remember the section numbers, because you don't have to quote the section numbers. Fine, you are not writing, not an issue. If you quote the section numbers, it will be good. The impression will be good. If you are not quoting section numbers also, fine, not a problem. But first in question you need to know what is it. Because they will give notice under 65, you will break your head as to what is this notice under section 65. Till the time you see somewhere audit, you will not understand what audit. But again audit, there are two sections, special audit also there and department audit is also there. So that's the reason why little bit section numbers you remember. At the end of the That's It book I have given what are the various sections and what does each and every section says like that. So you just try to recollect the section numbers. Along with the page numbers also I have given, so that for IBS it will be helpful when you carry this book. And I have given in the That's It book concept index also, ABC index. For example, you are seeing a provision relating to compounding of offence, you can go to C and you can search. Suppose you get a provision, one MCQ related to arrest, you know the answer but you wanted to double check. When the book is available, you wanted to double check. So you can see arrest related provision for that reason. Okay, and for this 4 subjects or 5 subjects, whichever you are writing the exam for, please carry those 5 subject books only in the IBS exam as well. Plus for other 3 subjects, that is auditing, you have anyhow the book, but you take CA intermediate auditing book also, and thereafter CA intermediate SM book, strategic management book, and CA final law book, SPOM-A and SPOM-B. These 4 also you take. Apart from the 5 regular subjects which you are preparing, you carry that books. In addition to that, what extra you need to take is this 4 books. Reason being, so they will be asking questions on standards on auditing, so which is at basic intermediate level and all they will be asking. Moreover, they will be asking a question that don't copy paste, analyze and write like that. But in the final book, we will not have the information to analyze, because that data will be detailedly given in intermediate book only. So that's why you carry. And SM book you need to take, because they will be giving some questions on forward integration, backward integration, Porter's 5 forces model, many things. But all those things are not there in SPOM-B much. They have just given, but lot of details is there in strategic management book. So that's the reason why you please carry that book also. Then the next aspect what you need to do is that, so daily 1 hour you need to devote, and you need to go through the case studies. Daily at least 1 or 2 case studies, half an hour. What you need to do, you don't have to read the case study, but you need to search for the information in the case study. I mean, case study is there, question is there, and you need to go to the IBS, the books, the weapons what you have, you need to search it, where it will be coming, and you need to put these stamps over there. So you buy this sticky notes, small sticky notes will be there, the finger size sticky notes will be there, that you paste and you write what is the concept in that. Like that you create all these things and keep it handy, so that when you go to the exam, immediately you can search and you can find the information. Actually you will be able to recollect the information, but double check if you want to do, you can do that. So that I have done in That's It book itself. I have given ABC index also. So coming back to this, so JAN'26 Technologies Private Limited received a notice under 65(3) of CGST Act on 10th May. Date on which documents were required to be submitted 25th May 2025. Date on which documents were actually made available to the department 4th June, and date of actual institution of the audit is 18th June. Find the following. What is the date of commencement of audit? What is the date? Whichever is later. The date on which actually they have started, or the date on which you made the documents available to them, whichever is later. So which is later? 18th June 2025 will be taken. So 18th June 2025, date on which documents were available, or date of actual institution, whichever is later. What is the date by which audit should be completed in the normal course? This is where you will get confused. Department audit has different time limit, special audit has different time limit. Okay. So what is the time limit for department audit within which it should be completed? 3 months, plus it can be extended for a further period of 6 months, not 3 months, 6 months. Whereas in case of special audit, 90 days, it can be extended for a further period of 90 days. Okay. So 3 months from the date of commencement of audit. So commencement of audit is 18th June 2025. You count the 3 months. So July, August, September. So therefore it will be 18th September. Sorry, I gave it as 17th September. It is 18th September. Always when the month is given, you need to increase it by months. You need to increase it by months. And when the date is given, you need to increase it by dates. I mean days. But when the month is given, increase by month only. So like that. Suppose if it is somewhere like 30th of January, 1 month is given, then what it will be? 30th of February, sir. We don't have 30th February, so take 28th February. 28th or 29th February, like that we need to take. And then next, what is the date by which audit should be completed, including the extended period? It can be extended for a further period of 6 months. September, October, November, December, Jan, Feb, March. So 18th March 2026 is the extended time for a further 6 months period. Okay. Next, question number 21. Mr. Vikramaditya Rao, a registered supplier under GST in the state of Gujarat, is engaged in providing financial consultancy services across various states in India. He made several taxable supplies during the month of April. On 18th April, he collected the IGST of 15,50,000 from his clients for services rendered. However, owing to internal accounting delays and a system migration going on in his firm, Mr. Rao failed to deposit the said tax amount within 30 days from the due date of payment. Okay. No show cause notice has been issued by the GST department until that point of time. So basically, he is engaged in consultancy services. He has made several taxable supplies. He collected IGST from his clients and he did not deposit within 30 days from the due date. 30 days from due date. So April means he need to deposit by 20th of May. So 20th of May is the due date. Thereafter also within 30 days he did not pay. No show cause notice has been issued by GST department until that point of time. Basically it is called as self-assessed tax because he reported that but he did not pay. He reported that he did not pay. So see this, before any such notice could be served, Mr. Vikramaditya Rao, upon reconciling his accounts, voluntarily decided to discharge his outstanding tax liability. He believes that if tax is paid before the issuance of show cause notice, no penalty would be levied and only interest, if any, will be payable. Accordingly, Mr. Rao self-assessed his total tax liability of 15,50,000 and made the payment on 26th June. You are required to determine under the relevant provisions of GST law and rules made thereunder the interest and penalty, if any, payable by Vikramaditya Rao in this case, assuming that he has not opted for quarterly return monthly payment scheme. Whenever a person is having a self-assessed tax liability and he discharges the tax liability, so whether he makes the payment before notice or after notice, etc. and all, that benefit of reduced penalty will not be available to him. There is a concept of benefit of reduced penalty. If you pay before notice, no need to pay penalty. If you pay within 60 days from notice, no need to pay penalty. Like that we have in 74A. Other than fraud case, before notice if you pay, no penalty. Within 60 days from notice if you pay, no penalty. But that is not applicable in case of self-assessed tax not paid within 30 days from the due date. So that is what you need to write here. Due date is 20th May. However, since the tax is actually paid on 26th June, interest at the rate of 18% will be payable. And what is the interest in this case? So what is the tax amount? First, 15,50,000. 15,50,000 into 18% into number of days delay. So 20th May to 26th June. So in May 11 days, in June 26 days. So therefore 37 days to 28,282 rupees is the interest. And as per 74A, where self-assessed tax or any amount collected as tax is not paid within 30 days from the due date of payment of tax, then the option to pay such tax before show cause notice to avoid penalty is not available, which means they need to pay penalty. How much is the penalty? Is it fraud case or other than fraud case? Other than fraud case. For other than fraud case, what is the penalty? 10% of tax, that is 15,50,000 into 10%, 1,55,500, 1,55,000, 15,50,000 only, na? 15,50,000. So 1,55,000, 1,55,000 or 20,000, whichever is higher, so should be taken. Sir, how sir? We are taking 10,000 na sir? This is IGST pa. This is IGST. So what you need to do? You compute as per CGST and then multiply by 2. Then also you will get the same answer. 15,50,000 is IGST. Half is what? CGST. You please see half. 15,50,000 divided by 2. 15,50,000 divided by 2. That is 15,50,000 divided by 2. You have calculator or can I get the calculator? 77,500. That is 10%. Correct? So 10% in or 10,000, whichever is higher. 77,500 into 2. So then also you will end up with 1,55,000 only. Therefore, penalty of 1,55,000 is payable by Vikramaditya Rao in the given case. That is with respect to this. Understood? This is related to self-assessed tax not paid. What if they have initiated recovery under section 79? Because direct recovery also can be initiated. Then what will happen in this case? So write down note. If direct recovery is initiated under section 79, if direct recovery is initiated under section 79, this point always you need to quote whenever there is a self-assessed tax. If direct recovery is initiated under section 79, then penalty equals to, then penalty up to 25,000 rupees, then penalty up to 25,000 rupees in brackets under each act is payable. So above penalty not applicable. Above penalty of 1,55,000 not applicable. So because we have a CBIC circular, that CBIC circular says that whenever they initiate direct recovery under 79, then the penalty, general penalty will be payable under 125, which is up to 25,000. This point I gave in the That's It book. Okay, I have given as to in case of self-assessment tax, the direct recovery can be initiated under 79. In that case, the general penalty. So this 74A penalty is not applicable. Then question number 22. Messrs. Bright Metals Private Limited, registered in Rajasthan, filed an appeal APL 1 on 15 March 2025 before the appellate authority, that is first appeal, Commissioner Appeals of CGST Act against the order of the adjudicating authority dated 1st February 2025. Order date is 1st February for demand of GST dues amounting to 1,50,000, 1 crore 50 lakhs. Date of filing appeal 15th March. Final acknowledgement issued by the appellate authority 20th March. Hearing notice under section 107 not yet issued. On 10th May 2025, Messrs. Bright Metals Limited reaches a settlement with the department and wishes to withdraw the appeal. Withdrawal approved on 15th May 2025. Comment on the following. Again, this concept is not tested in exam, related to withdrawal of appeal and again filing appeal. This is an interesting concept. See, is withdrawing of appeal permissible at this stage under rule 109C? See, at any time before issuance of notice for hearing. So usually when the appeal is filed by one party, they will be giving a notice for hearing. So before that notice for hearing, we can withdraw the appeal, either before the appellate order or before the notice for hearing. So we can withdraw the appeal in this case. So here notice is not given, but the acknowledgement is generated. If acknowledgement also not generated, no problem, we can withdraw. But if acknowledgement is generated, it should be up to the approval of the officer. So remember, withdrawal of appeal, like that one concept is there, which says that suppose if you file an appeal and provisional acknowledgement is not generated, notice also not issued, and order also not passed, anytime you can withdraw the appeal. If the provisional acknowledgement is given but notice is not given or appeal order not passed, you can withdraw subject to approval of the appellate authority. The moment they gave a notice for hearing or they pass the appellate order, withdrawal is not possible. The further appeal is only possible, because based on that, so why are you withdrawing? Because there is a kind of settlement that is happening with the department, etc. and all, like that it is given. So therefore further appeal is only possible, but here withdrawal is not possible. So all the conditions here are satisfied. So they did not give the notice for hearing, and even they did not pass the final assessment, like final appellate order. So they did not pass any appellate order. Now in this case withdrawal is possible, but there is one condition. What is that? It should be subject to approval. Why subject to approval? Because they have given the acknowledgement. They gave acknowledgement in this case. See this. As per rule 109C of CGST rules, withdrawal of appeal is allowed at any time before issuance of show cause notice under section 107 for hearing or issuance of final order. What is that final order? Appellate order. Okay, whichever is earlier. In this case, appeal filing date is 15th March. Acknowledgement is issued on 20th March. No notice or final order issued, that is pending. Therefore, withdrawal is possible since no notice or order has been issued. Then next, what is the procedure to withdraw the appeal and what are the time limit? What is the timeline? Will the appellate authority decide? Application for withdrawal must be submitted in APL 1W, form not required, by Bright Metals Private Limited as the final acknowledgement has been issued. They gave acknowledgement. As the acknowledgement has been issued, approval of the appellate authority is mandatory for withdrawal. And the appellate authority must approve or reject the withdrawal application within how many days? 7 days from the date of filing the appeal form. You understood? Within how many days, pa? 7 days. Within 7 days. Then, thereafter, if Bright Metals Private Limited wishes to file a fresh appeal later, is it permissible? What will be the time limit in this case? Fresh appeal is permissible. Don't check for that seat book. I don't think so it will be there in that seat book. I have not given. This much of micro points and all I would not have given in that seat book. Oh, you mean to say all 4 volumes I can condense in that seat book itself? Then it is not called as that seat book. Then I have to make that seat book volume 1, volume 2, volume 3 like that. Okay. Sir, these are all some micro points, sir. That's why I am giving all these things in mighty 50 questions. Okay. So it's not there. Then what should we do, sir, then? See, 90% of the portion I have given. That 10% is something which I have not given. I am admitting that. Where I am telling that 100% I have given in that seat book. No. What you should do is that when you start solving the question and answers, when you start reading it from the main book, if you can depend only on this book, do you think that CA Institute is a joke for you? That only this small book you can read and you can go for the exam and everything is there in this book? Definitely no. Then a ranker versus a person who just read this book, what is the difference? Yeah? A ranker will put hours and hours of effort. Come on, respect him. Wherein they read from regular books. So you are not reading from regular books. You read from that set book only. And if you are clearing just like that, you can clear. But definitely that extra marks are there. Na? That extra marks requires extra effort. I know that you will not read all those things. So in the form of mighty 50 questions, I am including all those probable areas which the ICA can ask. Okay. And in the test series also. So in test series also I have included. That's why always I will tell the best combination will be that set book plus solved workbook. Because in solved workbook I have given many such questions, extra concepts, everything in detail. These two you should be reading. And apart from that, this mighty 50 plus test series, enough. So this is okay. Either you need to read the entire regular book or versus this. At least you should have made this. Then next, fresh appeal is permissible if withdrawal is approved. The usual time limit to file an appeal before appellate authority is what? Generally, what is the time limit within which appeal should be filed? 3 months from the date of communication of order. Immediately one student will message here. What is that? Sir, that extra information, can you give a list so that we will refer? Definitely. That extra information, can you give a separate PDF, sir, so that we will refer that? Okay. No, I will not give. No, I am harsh only. I will not give, because if I need to give, I need to give at least, some pages of the study material like this. So I cannot give. That effort you need to put in, pa. Okay. And next, fresh appeal is permissible under section 107 if withdrawal is approved. The usual time limit to file an appeal before appellate authority is 3 months from the date of communication of order passed by the adjudicating authority. But in case of withdrawal, the period during which the earlier appeal was pending, so that period will be excluded. So please listen. What is the time limit for making an appeal? 3 months. 3 months from the date of adjudication order. But we first filed an appeal and appeal got withdrawn, and again we are filing a fresh appeal. Now what they are telling, from the date you filed the original appeal till the date you have withdrawn, that period will be excluded while counting the 3 months, because you filed, you withdrawn, that period you take out, then you see what is the remaining period by which you need to file the appeal. You got it? Now first, what is the date by which order is passed? Order date, adjudication order date, 1st February. 1st February, what is the regular time limit to go for appeal? 3 months. So March, April, May. By 1st May, you should have went for appeal. But when you went for appeal, 15th March. And when you have withdrawn, 15th May. Correct? And when they have approved the withdrawal, 15th May. You made a withdrawal on 10th May, they approved it on 15th May. So please concentrate. From 15th March to 15th May, what is the period? 15th March to 15th May, what is the period? 2 months. March to April, April to May, 2 months. What is your regular time limit? 3 months. Now you just extend it by 2 months. Why you need to extend it by 2 months? Because this 2 months period will not be counted for that 3 months. Is it clear? Pa, this is like a stay period, pa. This is like a stay period. So this will not be counted. So due to that reason, what we need to take, the date, that is 1st February 2025 is the order date, plus 3 months regular time limit, plus this 2 months from which date to which date? From the original appeal date till the withdrawal date, original appeal date till the withdrawal date, withdrawal approved date. So that period will be excluded, so that you will get the revised time limit for making fresh appeal. 1st February 2025 plus 3 months regular time limit plus 2 months. So 1st July 2025 will be taken. That is, you filed an appeal and acknowledgement issued, withdrawal application filed, withdrawal approved. So from the date of appeal to the withdrawal, this period is there na, that period will not be counted. Where is it given? It's given in the rule. The usual time limit is 3 months, but in case of withdrawal, the period during which the earlier appeal was pending from the original filing date to the date of withdrawal approval is excluded. So that is with respect to this. Understood na? Usually CA Institute will frame like this only, because we all will be studying about regular provisions and go. That's why. Next. But don't worry, I have searched all those things and I have given the questions. Mr. Aditya Kurana, registered under GST Act, has committed a breach in the payment of tax amounting to 7,800. The assessing authority has imposed a penalty in accordance with the law applicable to the breach, invoking the provisions of section 126. Mr. Kurana contends that this is a minor breach and therefore no penalty should be imposed. What is your answer? This is based on section 126. Section 126, I told you, a breach is a minor breach if the total tax involved is less than 5,000. In this case, the total tax is not less than 5,000, so it is not a minor breach and therefore penalty cannot be waived off. Then, in another instance, Mr. Kurana has omitted certain details in documentation which are not easily rectifiable. This occurred due to gross negligence on the part of his accountant, and he argues that since he was unaware of it, no penalty should be levied. What is your answer? Huh. Easily rectifiable? Yes, it is easily rectifiable. Only when it is easily rectifiable, there is no penalty. But here it is not easily rectifiable. So that provision says when there is offence that is easily rectifiable and made without a gross negligence. But here not easily rectifiable and moreover it is gross negligence. Therefore, the penalty cannot be waived in this case. So that is this. First one, less than 5,000. So here it is 7,500. So the penalty will be imposed. Next one, omission or mistake is deemed easily rectifiable only if the apparent is on the face of the record and not due to fraudulent intent or gross negligence. So they have omitted, that is not easily rectifiable. However, penalty payable in this case. Next part you see. Mr. Khurana also voluntarily acknowledges a major procedural lapse on his part and requests the assessing officer to condone the lapse, stating that the loss to the revenue was not substantial. Can the voluntary disclosure of the mistake be a mitigating factor for reducing the penalty? Yes, because he is voluntary disclosing means there is no intention to evade. So definitely that will be a mitigating factor. So a person voluntarily disclosed to proper officer any breach of tax law or regulation before it is discovered by officer. Such voluntary disclosure may be considered as a mitigating factor while determining the penalty amount. Got it? So therefore here he accepted voluntarily a major procedural lapse. So definitely that will be considered as the factor for reducing the penalty. Further, in a separate matter, a lapse on the part of Mr. Khurana does not attract any specific penalty provision under CGST Act. He firmly believes that no penalty can be levied without a specific statutory provision. Wrong. So we have a general penalty under section 125. Whenever in the law there is no specific penalty, but there is a offence or violation or breach of any rule of the provision or act, etc., definitely the general penalty will be applicable up to 25,000 rupees. So section 126 states that general principles do not apply where penalty is fixed, and in all the cases assessing authority is empowered to take action in accordance with the nature, and therefore in the situations where specific penalty provision exists, such penalty will be imposed regardless of section 126. But if it is not there, then the general penalty will be applicable. The next question number 24. This is your like RTP question only. This is an RTP question only. Already they have asked this. It's an RTP question only. Look into question number 24. Horizon Holidays Private Limited, a registered taxable person under GST in the state of Karnataka, provides overseas package tours. The company's gross receipts from such tours for the month of March 2025 amounted to 60 crore. So what is the total gross receipts? 60 crores. Out of that 60 crore, 50 crore were received from registered persons. The company, while filing GSTR1 for March 25, tampered the invoice amounts issued to unregistered person and underreported 25 crore on account of B2C transactions. Okay, and that is transactions with unregistered person, thereby understating the liability by 4.5 crores, that is 18% of 25 crores. And in addition, while filing 3B for the same month, Horizon Holidays availed ITC of 0.5 crore on account of fake invoices received without actual receipt of goods or services, and department initiated prosecution proceedings against Horizon Holidays Private Limited for these offences. Prosecution means imprisonment. Imprisonment. What is the amount involved, pa? Tax involved. Tax involved in the offence. What is the first offence? What is the first offence? Tampering the invoice. Amounts issued to unregistered person, underreported 25. So invoice default. Correct? They made supply but they did not give invoice. Am I right? And next one, 0.5 crore. What is the offence? Invoice? No. 0.5. Invoices received without actual receipt. Received. ITC default. ITC default. Okay. And first one, actually invoice problem will not be there. Reason, unregistered person. unregistered person, which means they falsified the financial record. See, if it is registered person only, that invoice default will come. Here they gave invoices, they gave invoices. While filing GSTR1, they tampered the invoice amounts. They did not tamper with the invoice. They gave properly invoice, but tampered the invoice amounts issued to unregistered person and underreported 25 crore on account of B2C transaction. Okay. So this is books of accounts default, falsification of financial records, etc. Invoice they gave properly. Then next, Horizon Holidays Private Limited deposited the tax due along with interest and penalty. Okay. Deposited 1.1 crore as compounding amount, being 25% of the tax evaded, and requested the commissioner for compounding of the offence. You understood how they will give question on compounding? They have not asked, but they can make a question like this. Now, even though all conditions for compounding were fulfilled, commissioner rejected the request on the ground that the compounding amount deposited was less than the minimum required. Examine the case and comment on the rejection of the compounding amount request by the commissioner under section 138. Don't see the answer. Don't see the answer. First focus here. What is this default? Books of accounts default. What is this default? ITZ default. Whether these two are eligible for compounding? Yes. All offences other than invoice without supply, or if the prosecution order is already passed, compounding is not possible, but in other cases compounding is possible. And in this case, for 4.5 crores, what is the compounding fee? What is the compounding fee? 25%. 25%. Okay. Correct? 25%. And while availing ITZ on account of fake invoices, 1 second. So availing ITC on account of fake invoices is how much? 40% to 60%. That is the minimum. So why? Because it does not exceed 5 crores, but it exceeds 2 crores. Only when it exceeds 2 crores, we need to take it. So should we see it offence wise or prosecution wise? Prosecution wise, not offence wise. I told you. It's not yearly, it's not offence wise. We need to see it based on the prosecution wise. What is the prosecution amount? 4.5 plus 0.5, that is 5 crores. Exactly 5 crores means 40% to 60%. Correct, Appa? For books of accounts default 25%, but here it is 40% to 60%. But we have one provision. When there are two offences, the highest should be taken. What is the highest? 40 to 60% should be taken. What is the minimum? 40%. Correct? So 40% of 5 crores, that will be 2 crores. But how much they have deposited? Only 1.1 crore, which is less than 2 crore. So in that case, whether the commissioner's rejection is valid? Yes, that is valid. Say this. Offences committed by Horizon Holidays, availing ITZ using fake invoices, falsification or substitution of financial records, and understated output tax liability 4.4, fake ITZ 0.5, so total 5 crores. Total 5 crores. Compounding provisions. Compounding amount is prescribed under Rule 162. Where multiple offences are committed, the higher rate of compounding amount is applicable. Availing ITZ on fake invoices. So 40% to 60%. Falsification of financial records 25% and 25%. So why 40 to 60? Because the amount does not exceed 5 crores. Total amount does not exceed 5 crores. Since the higher rate applies, 40% is used for both the offences. So 5 crore into 40%, 2 crore. Horizon Holidays deposited 1.1 crore, which is less than the required compounding amount. Therefore, commissioner's rejection of compounding request is justified. So this question is created mainly to test that point. One is books of accounts default, another one is the other default. So which rate should be taken? Okay. Then question number 25. Messrs. Omega Enterprises, registered in Delhi, engaged in trading of electronic goods, was found guilty of issuing fake invoices without actual supply of goods or services during a GST investigation. Pa invoice without supply pa. invoice without supply. And the findings reveal the total value of fake invoices 30 crore, tax evaded 5.4 crores. So, is it an offence that attracts imprisonment? Yes. Arrest? Yes. Why? More than 2 crores. IIC, invoice default, ITC default, collect an amount as tax not paid within 3 months. It is under IIC. So, more than 2 crores, arrest. And what is it? Cognizable plus non-bailable or non-cognizable plus bailable? Cognizable plus non-bailable means arrest can be made without the arrest warrant and he need to be produced. He need to be informed the grounds of arrest and produced before the magistrate within 24 hours. Okay. So, that is the section 132 and 69. So, the offence falls under 132 as the tax evade exceeds 5 crore, categorizing it as cognizable and non-bailable offence. They gave in the question, it's super. The Commission of Central Tax authorizes the arrest of Mr. Rohan Kapoor, the Managing Director of Omega Enterprises, under section 69. Of course, arrest will not be made with respect to company. How company can be arrested? Company cannot be arrested. So, whenever the offence is committed by a company, the Managing Director or CEO or any whole-time director of the company who is responsible for day-to-day affairs of the company will be arrested. So, therefore, Rohan Kapoor, the Managing Director of Omega Enterprise under section 69, whether arrest can be made in the given case. Suppose if it is any other person, sir, what if it is a firm? Partner, managing partner. If it is HUF, Karta, and suppose if it is a trust, the trustees, you got it? Managing trustee. So, they will be arrested. And 69, whether arrest can be made in the given case. So, yes, arrest can be made. So, first you need to write as per 69. Commissioner can authorize arrest if a person is believed to have committed the offences under 132, which includes invoicing, ITC default, or collected an amount as tax not paid within 3 months. But in this case, that point is not applicable. It is ITC default. If tax evasion exceeds 5 crores, the offence is classified as cognizable and non-bailable. Cognizable means offence for which person can be arrested without a warrant. Non-bailable means bail is at the discretion of the magistrate. For cognizable offences, the arrested person must be informed the grounds of arrest, must be produced before magistrate within 24 hours, and the procedure for arrest is given under Code of Criminal Procedure. Value of fake invoices 30, tax is 5.4 which exceeds 5, so it is a cognizable and non-bailable. Therefore, Commissioner is authorized to do the arrest and the grounds of arrest is communicated and a memo should be prepared with details of arrest signed by independent witness. Family members should be informed about the arrest as per CRPC and produced before the magistrate within 24 hours of arrest. Yes. So, as per CRPC, they need to create the information in arrest memo and they need to mention, and the witness should be there wherein you are explaining him as to why you are arrested. So, then that person should sign and the witness also should sign that the officer has explained truly what he has written in the arrest memo, because they will tell some reason but the arrest will be for some other reason. So, that should not happen. And then the family members of that person should be intimated, otherwise they will file a habeas corpus. So, for that reason they need to intimate to the family members and then the person should be arrested and produced before the magistrate within 24 hours. This is there. That is with respect to this question number 25. So, on arrest again they have not asked questions, any question so far, but connecting these points they can make a question. Next, question number 26. From the details given below, determine the maximum amount. And sir, one doubt, sir. Can even the person who is abetting to commit an offence also be arrested? No. No. Only imprisonment. Arrest is not there. Arrest is not there, only imprisonment. Okay. Then, but under the status of accused number 2, accused number 3, like that and all, can they arrest? They should not, but they have done in the past. Practically they have done. GST department arrested chartered accountants, so in the past, but actually that arrest should not be made with respect to chartered accountants as per the law. And offence that leads to imprisonment is there. Imprisonment is there, that it became a big issue and all in the recent past. Thereafter, what police started doing, I mean the GST department started doing, they started filing a criminal case under CRPC on the chartered accountant. And under CRPC, criminal procedure, like criminal code, so these people are getting arrested by the police. Department cannot arrest. Department cannot arrest. So police will do the arrest, stating that, you know, this section 420 fraud case, etc. and all, they will put on them and they will be trying to arrest them. Okay. But as per 69, it is only the person who committed that offence. From the details given below, determine the maximum amount of fine in lieu of confiscation leviable under 130. Last attempt they asked 129. September they asked 129. Now owner coming forward, owner does not come forward. So 130 they can ask. 130 separate penalty, fine, etc. is there. From the following details, determine the maximum amount of fine in lieu of confiscation leviable under section 130 of CGST Act. From the following information, goods liable for confiscation. So we need to determine two maximum redemption fine. One is for goods, another for conveyance. What is the redemption fine for goods? Maximum fine. Market value of the goods minus tax chargeable thereon. What is the market value of the goods? 18 lakhs minus tax chargeable thereon 3,24,000. So therefore 18 lakhs minus 3,24,000 should be taken. And this is the total pa. This is the total. This is the total. Then what is the fine under CGST Act? Half. Half. See, this penalty is total. The maximum redemption fine, because it's not penalty, it is redemption fine. Fine will always be total. Fine is always total. I told you only in 3 places it is CGST, SGST. What is that? Penalty, late fee, pre-deposit. But other places, fine and all will be total. This is total. In this total, CGST, SGST like that they can divide. But the total maximum redemption fine is this. So market value of the goods minus GST payable thereon, that will be 14,76,000. This is both total fine under CGST and SGST. Next, what is the fine for release of conveyance? Tax payable on the goods transported thereon, that is 3,24,000. So these two are the total fine under CGST and SGST. Next, question number 27. Discuss the prosecution, arrest and bail implications, if any, in respect of the following cases pertaining to the period November 2025. Mr. Arjun avails ITC of 162 lakhs without actual receipt of excisable goods. However, he is yet to utilize the same, that is yet to confirm this credit in his GSTR to be returned. Wrong availment of ITC, yeah? Yes or no, yeah? Wrong availment of ITC. And Arjun avails ITC without actual receipt of goods. However, he is yet to utilize the same. No offense. He availed, but he did not utilize. So no offense. If he has utilized, there will be offense. But he is yet to utilize. That's why there is no offense. So no offense as ITC availed is not utilized, not confirmed in 2B. Prosecution, arrest and bail not applicable. Mr. Samir willfully evades payment of tax. So 275 lakhs. Willfully evades the payment of tax 275 lakhs. Then what is this? Collected tax not paid within 3 months. That point, okay, willfully evades. So what should be taken? Offense is there? Yes. What is the imprisonment? 2.75. If it is first time, up to 3 years. More than 1 crore, up to 1 year. More than 2 crores, up to 3 years. More than 5 crores, up to 5 years. Okay. Up to 3 years with fine. If it is first time offense. If it is first time offense, you write only first time offense. If it is subsequent offense, up to 5 years plus fine. Then arrest possible because it is more than 2 crores. Arrest by Commission of Central Tax. But it is not more than 5 crores. As it is not more than 5 crores, bailable. Okay. Sir, they did not give as to which offense it is, sir. They did not give which offense it is. So then how should we take? You consider it as evades payment of tax. So therefore that invoice default or ITs like collected amount as tax not paid under that category. they did not specifically give. So in that case, you take it as invoice default. Willfully evades the payment of tax means maybe they would have made supply and they did not give the invoice, maybe because of that. Okay. So that assumption should be right in the exam. Yes. Don't worry, in exam they will be specific. In exam when they give it vague, you take the assumption and write. But try to write the answer with prosecution. Don't tell we are assuming that it is not covered under the offences because of it there is no prosecution. No. Take the other side of the assumption. That assuming that it is a invoice default or it is collected tax not paid within 3 months, this will be the situation like that. Mr. Dinesh, so we are assuming it as what? Invoice default. Invoice default. Mr. Dinesh collects 585 lakhs as tax from its clients but deposited only 25 lakhs with the central government. Collected as tax. Collected as tax means representing as tax. 585 minus 25. How much? Definitely more than 5 crores. So what is the imprisonment? Up to 5 years with fine. First time itself. And it is cognizable offence plus non-bailable. Arrest can be made. Yes. Arrest can be made and it is a non-bailable offence. Mr. Manish collects 265 lakhs as IGST. But always this amounts 1 crore, 2 crore, 5 crore should be total tax. So as IGST on his clients deposited 261, 265 minus 261, 4. So collected tax not paid within 3 months, that point is not there, correct? Sir, only if it exceeds 2 crore there is imprisonment, sir. Under that there is no imprisonment. But falsifies or substitutes financial records, books of accounts default. So not because of collected tax not paid within 3 months, but because of books of accounts default there will be imprisonment. So what is the imprisonment? Up to 6 months or fine or both. Up to 6 months or fine or both. And arrest. Can the arrest be made with respect to this person? No. Arrest by Commission of Central Tax, not possible. Arrest is not possible in this case. And when arrest is not there, we should not write about the bailability etc. But in study material they have given, so you write it as bailable but mention that when arrest is not there. I told you we need to write a note. When arrest is not arising, when arrest is not applicable, when arrest is not applicable, comma, question of bailability does not arise. And arrest without warrant by commissioner, you have to write that because it is a cognizable offence na, the Dinesh case. It is a cognizable offence, so you need to write it as arrest without warrant, okay. But all other offences will be non-cognizable offences. And what if it is subsequent offence? Everywhere, first case alone it is not there, all other cases it will be imprisonment up to 5 years plus fine. And what is the minimum imprisonment? 6 months. That also you try to write in the exam. Next, we'll take a break and we'll continue with the remaining questions. So we have seen 27 questions. So we are left with the remaining, I think around some 22 questions, 23 questions we have that we will quickly complete. We'll take a break for 15 minutes. So have some good coffee, tea and come back. We'll continue. Okay, we'll start. Question number 28, you see. A show cause notice was issued demanding GST of 2,10,500 for the month of August 2000 on 5th October. However, after conducting a personal hearing, the adjudication authority found that there was a typographical error in the show cause notice while mentioning the GST amount and confirmed the demand for 21,10,500. The assessee now seeks your advice. What would your advice be in the following situations? Number one, assessee approaches you after the issuance of the order. Now we need to invoke section 75 and we need to answer as per section 75. The amount in the order should not exceed the amount in the notice. If the amount in the notice is for 2,10,500, the amount in the order should be less than or equals to 2,10,500. But in this case, as the amount in order is beyond the notice, the order is invalid. That is how we need to give the reply. You understood? This is the answer for the first part. Second, suppose a correndum revising the amount to 21,10,500 is issued on 18 November. Then what is your answer? Now we need to invoke section 161, rectification of mistake apparent on the face of the record. In other provisions we have seen, ethics and other provisions. What is that? Whenever a notice or any order or any communication or any direction which is given by the department, and if there is a mistake apparent on the face of the record, that mistake can be rectified suo motu or based on the information from any officer, brought to notice by any officer or brought to notice by the taxpayer. Then they can rectify the mistake. What is the time limit within which it should be brought to the notice by the taxpayer? 3 months. Then they can rectify. What is the time limit for rectification? 6 months from the date of issuance of order. What is the date of issuance of order? 5th October. 5th October means, so they have to do it for the month of August, 5th October. They have to do it within 6 months. But there is one exception. If the error is a typographical error or any arithmetical error, then in that case there is no time limit to rectify. That 6 months time limit is not applicable. In this case it is a arithmetical error or typographical error. Due to that reason there is no time limit for rectification and they can rectify the notice, and accordingly so we need to pay the amount of 21,10,500. Got it? That is what you need to write. So connecting section 75 and section 161. So this is actually one very old study material question. It's a study material question, not tested. Okay, definitely they can make this because related to ethics and other provisions, usually one question they will be asking. So far they used to ask a question on anti-profiteering. Anti-profiteering is not there now. So that's why they can take this rectification of mistake apparent on the face of the record and they can ask. So first one, advise after issuance of order. So 75 you need to invoke and you need to tell amount in the order cannot exceed the amount in the notice. So therefore the SC has valid grounds to file appeal against the adjudication order as it violates the statutory limit prescribed. Suppose after correndum, section 161, rectification of errors. However, where the rectification of error is purely clerical or arithmetical error, then the time limit not applicable. In this case, correndum is issued on 18 November, seeks to correct a typographical error. Since this is a clerical error, the rectification is valid and time limit not applied. Therefore, assessee should respond to the show cause notice considering the revised amount of demand as mentioned in the correndum. Then question number 29. In an appeal filed with High Court by Pratik Limited on the question whether activity undertaken by Pratik Limited amounts to supply, the appeal was decided in favor of Pratik Limited. The amount of tax, interest and penalty involved were IGST 1.2 crore, interest 60 lakhs and penalty 50 lakhs. Now they want to go for appeal to Supreme Court. High Court, appeal filed with the High Court on the question whether undertaken amounts to supply. The appeal was decided in favor of Pratik. So now department might be going for appeal to Supreme Court. What is the monetary limit for appeal to Supreme Court? 2 crores. In this case, 1.2 plus 60 plus 50, definitely it exceeds 2 crore. Can the department file an appeal? So the question is, can department file an appeal to Supreme Court? to Supreme Court. What is your answer? First, while determining the monetary limit, only if the tax is in dispute, with or without penalty or interest, only the tax amount should be considered. In this case, the tax amount is 1.2 crore. So don't count interest and penalty. As the tax involved in the offence does not exceed 2 crores, appeal is not possible. However, in some cases, the appeal can be filed by the department to the Supreme Court irrespective of the monetary limit issue. Number 1, if the question is related to valuation, classification, place of supply, then ITC, or any issue which is having a recurring implication in future, then in that case they can definitely make an appeal irrespective of the monetary limit issue. As the activity is supply or not a supply, which is definitely going to have some recurring implication in future, so the department can prefer an appeal on that ground. So first we need to write about the monetary limits for filing appeal. So 20 lakhs for GST 1 crore, 2 crore. So this 20 lakhs, 1 crore and 2 crore is CGST or total tax? Total tax. Further, where the dispute amounts to demand of tax with or without penalty or interest, we need to see only the tax. We should not see the interest penalty. Here it is 1.2 crores. Thus, appeal cannot be filed by the department to Supreme Court in the given case. However, there are certain monetary limits specified. So above, for filing appeal or application by the department before GST High Court for filing specially petition or appeal, irrespective of the monetary limits, that we need to write. What is that? Number 1, where the act ultraviolates the constitution, or the rules ultraviolates the act, or the notification or order or circular ultraviolates the act or rules, or where the issues related to valuation, classification, refund, place of supply, okay, or any other issue. ITC is not there. So valuation, classification, refund or place of supply or any other issue which is recurring in nature. In view of the above case, if in the given case a matter is related to valuation of service, appeal can be filed by the department based on merits irrespective of the monetary limits. But actually whether the activity is amounting to supply or not is the question. So therefore you need to write, in the present case, if in the given case a matter is related to supply which has recurring implications in future, which has recurring implications in future, appeal can be filed by the department to Supreme Court based on the merits irrespective of the monetary limits. Okay. Then next, question number 30. You understood now this one? Question number 30. Smith Incorporation, a company located in USA, charges subscription. So from its unregistered customers in India. Smith Incorporation, a company in USA, charges subscription fee from its unregistered customers in India at its online money gaming portal. The department contends that GST should be charged on the subscription fees which Smith Incorporation received from Indian customers. Smith Incorporation opposes to the view stating that since online money gaming are intangible goods and do not cross the customs frontiers physically, in this case GST is not leviable thereon. Considering the above facts, you are required to answer the following questions. First, what would be the place of supply in this case? What will be the place of supply in this case? Location of recipient. Why? Online money gaming is goods. Online money gaming is goods on import of goods. Location of importer will be taken as the place of supply. Is it clear? Online money gaming is supply of goods because it is specified actionable claims. Even though it is supply of goods, but the levy is as per IGST Act, and it is import of goods. Import of goods, the place of supply will be location of importer. So that point you need to connect and write, and the location of importer will be in India. So that will be taken. So section 11 you need to give reference. Accordingly, in the given case, place of supply would be location of recipient of specified actionable claim, that is India, because location of importer will be taken as the place of supply. Second, whether GST is available on the subscription fee charged by Smith Incorporation? Yes. Now you need to connect it to 14A, and you need to write supplier outside India will pay GST, and first as per section 5, even though it is import of goods, the levy is as per IGST Act, and accordingly as per 14A, so supplier outside India will pay GST. And next, if yes, who is required to pay? Supplier outside India. But how the supplier outside India will pay GST? You have to write, if they have physical presence. If they have physical presence in India, then they will register and pay GST. And the type of registration will be simplified registration. If they don't have physical presence in India, they need to appoint, like they need to check whether they have a representative in India. That representative shall register and pay GST. If neither they have physical presence nor they have a representative, they need to appoint a representative, shall appoint a representative, and that representative shall register and pay GST. So related to 14A, either we may get a question like that related to returns or related to the registration requirement and connecting to place of supply, online money gaming. Then question number 31, Mr. Divas, a registered person in Agra, Uttar Pradesh, purchased a car for 12,50,000 on 15th October. On 31st October, the car met with an accident resulting in minor damage. Due to urgency, he got his car repaired in the local garage of a nearby market instead of garage authorized by his general insurance company, that is Suraksha Insurance Company, through which the car was insured. The total cost of the repair was 54,000 excluding GST 18%. On the instructions of Mr. Divas, the invoice of the entire amount was raised by the garage in the name of the insurance company. Super. The invoice is the name of the insurance company. The insurance company approved the claim amount of only 40,000 after the survey and reimbursed the same along with GST 18% to Mr. Divas. In light of the above facts, you are required to answer the following questions. Whether Suraksha Insurance Company is eligible to avail ITC on the basis of invoice raised by garage? If yes, what would be the amount of eligible ITC? First, you need to write as per section 17, subsection 5. Insurance service in relation to motor vehicle is blocked credit. However, if the motor vehicle purchased is eligible for ITC, then the insurance service also eligible for ITC. However, if the repairs and maintenance or insurance service or any other service is received by insurance company, ITC is always available. So, in the present case, ITC is available to Suraksha Insurance Company provided the invoice is in the name of the Suraksha Insurance Company. As per CBIC circular, if the insurance company has reimbursed only 40,000 rupees, proportionate to that 40,000 rupees only they will take ITC even though the invoice is for 54,000. So therefore, ITC available to Suraksha Insurance Company in the given case is 40,000 into 18%. How much is that 40,000 into 18%? So that is the answer we need to write for this. So thus the ITC of 7,200 is available to Suraksha Insurance Company. This is an RTP question. I say RTP question. Then next, second, would your answer be different if garage has issued two different invoices, one for 40,000 plus GST at 18 to Suraksha Insurance Company, another for 14,000 plus GST 18% to Mr. Divas? What is your answer? Then also same, the insurance company can take ITC to the extent of 40,000 into 18%, 7,200. And what about Mr. Divas? Mr. Divas cannot take ITC because the motor vehicle purchased by Divas is not eligible for ITC. Consequently, the repair service also not eligible for ITC. It's covered under the blocked credit. But the insurance company cannot take ITC as the invoice is not in the name of the insurance company for that 14,000. Even if the insurance company has invoice of full also, they can take ITC only to the extent of 7,200. Third, so that is the answer we need to write in this case. Only 7,200 rupees available to Suraksha Insurance Company. In case the garage issued invoice in the name of Mr. Divas, would Suraksha Insurance Company be eligible to avail ITC? Why? Invoice not in the name of insurance company. Where the invoice for repair is not in the name of insurance company, one of the conditions for availment of ITC is that the person availing ITC should be in possession of tax paid document. So therefore, in the given case, if invoice has been raised in the name of Mr. Divas, then Suraksha Insurance Company would not be eligible to take ITC. Suppose if they ask, what is the position in case of Mr. Divas? Can Divas take ITC? Then you need to write, if the motor vehicle purchased is eligible for ITC, then the repair invoice GST paid can be taken as ITC by Mr. Divas. Next, question number 32. ABC and Associates LLP, a firm of chartered accountants, was empaneled with the Commissioner of GST for appointment as special auditor under section 66 of CGST Act. Special audit. X Limited, a registered person under GST, was selected by the office of the Commissioner for special audit under section 66 for a financial year on account of irregularities noticed in the return during scrutiny of returns. ABC was nominated by the office of the Commissioner for special audit of X Limited. The ITZ claim by X Limited, that is the auditee, under form ITZ1 was certified by one of the associate firms of ABC in favor of X Limited. So ABC is the special auditor, one of the friend of ABC, chartered accountants, another CA firm has certified the ITZ1 in favor of X Limited. Such certificate was based on incorrect facts and against the eligibility criteria for ITZ as per section 18. However, ABC fails to exercise due diligence and certificate is taken on record by ABC as an audit procedure and relied upon at the time of finalization of audit report, because their friend only did the certification. And submission of findings. Discuss briefly what will be its implications under GST law. What's your answer? So first, in this case, there is a penalty provision under 122 subsection 3. On whom? On whom? On ABC. On ABC. Why? They are a party to the offence because they completed the audit and they gave the certificate under section 66. Also, yes, also on associate, there will be penalty under 122 subsection 3 on both. In this case, if ABC at their instance, if the offence is committed at their instance, that is at the instance of ABC, if the offence is committed, then 122 1A will come and they should be beneficiary. You know when they will be beneficiary? If they get the share, the percentage or share, then only they are beneficiary. Fees collected is not beneficiary. Professional fee collected is not beneficiary. Audit fee or whatever the certification fee, that is not beneficiary. Okay. And it will also lead to abetting to commit an offence related to ITZ availment. So even imprisonment under section 132 is also possible provided the evasion exceeds 2 crores. Evasion exceeds 2 crores. So these are the point, and also as the due diligence is not exercised and they have completed the audit, it amounts to professional misconduct, and because of the professional misconduct, that ICI Act, whatever is that reprimand, CA, penalty, all those things also you need to write. That is this. Non-reporting of material discrepancies noticed during the audit procedure and reliance upon incorrect certificates and information. ABC audit team did not exercise due diligence to ascertain the ITC availed by X Limited is not in compliance with GST provisions. Instead, ABC relied upon a certificate issued by its own associate firm which justified the incorrect input tax credit claim by X Limited. In such a scenario, both ABC and associate firm which issued the certificate to justify the ITC were aiding and abetting X Limited in wrongful availment, which is an offence punishable with a penalty under 122 subsection 3. Why 122 1A is not invoked? Because nowhere in the question it is given that they are getting a share or at their instance the offence is committed. See, both the conditions should be satisfied. At their instance the offence should be committed and they should be beneficiary. Just at their instance the offence is committed, it will not lead to 122 1A. At their instance and they should be beneficiary of the offence. That too offence related to ITC default or that invoice default. Okay. This offence may also be punishable with imprisonment and fine under 132(1) depending upon the amount of default involved and subject to specified condition. Further, ABC as well as its associate firm may be held guilty of professional misconduct, but that information you need to write. So anyhow you learn in auditing that already I gave, so that you need to write. So under which schedule they will be coming under misconduct and what will be the penalty, reprimand, CA, removing from the members list, those points and all you need to write in exam. Okay. Next, sir, I did not study auditing, sir. No issue. This alone you study and go. Anyhow useful for IBS. Yes, pa, seriously. Because if not in IDT, for IBS, whenever you study all the 5 subjects, you need to study wholeheartedly. That is the idea behind removing 2 papers in CA final. You have to study wholeheartedly. You cannot make selective preparation. You need to make wholehearted. 100% coverage is the requirement. Okay. So it's not about, I will cover only 60% portion or 75% portion. I will go and write the exam. Means you are taking a chance. Tomorrow, if you are failing and you are trusting a person, believing in that only this much is sufficient, and if you go for exam, if you fail, they will take care of your life? No. They will not take care of your family, correct? So everyone will become rich. Everyone's objective is to become rich at the cost of CA students. So please try to understand that it is your life, because what will happen? Again you fail, again you will come and join fast track batch or some other batch, you will buy books, so more and more money, okay? So it's not because of the first timers the CA coaching is surviving. It's only because of the failures the CA coaching is surviving. First timers CA coaching cannot survive because the major money will go off in the marketing expenditure, because you might be knowing for bringing in the crowd how much money they are spending, big hoardings and lot of money, because only after entering into CA coaching and CMA coaching I understood the depth of it. So even we started, so all foundation to final coaching, everything we are also doing, but I can understand the reality that student will not accept if we are telling I will take classes properly, I will be honest, I will be integrity and trust me like that. No, student will not. So if I show the hype with babes, if I start dancing, or with lot of overaction if I do, then only people believe that I am a coaching center and they will come and join. I need to tell. So I need to call the mass people, because like how Ajit said, in a country of 150 crore population, calling for a crowd is not great achievement, but today that is only required. So more and more crowd we will call, whether they will clear or they will not clear. Next question, you come, free food I will give, means people will come, because for them entertainment is required. People will come and they will put all those photos, they will tell, these many students have cleared CA like that. So automatically parents who are watching it, actually parents are innocent, they don't know anything about it, because your parents also don't know anything. They all think that, okay, if we spend money, you will clear like that. Because I recently come across one CA final student's father who came to me and is telling, sir, one coaching center is there, sir, they are asking for 1 lakh fees, sir. And they are guaranteeing that I will ensure that your student is clearing. Some care we will take, special care or intensive care we will take, and we will be giving like that something. And then I told him, please ask them to sign a stamp paper for 1 crore, sir. If that be the case, you send your kid, 1 lakh it is worth. See how parents are also like idiots, they are behaving. Like 1 lakh if you spend, you will be able to become CA. Hard work and all who will put, you understood? Hard work who will put 1 lakh, and that coaching center happy, they will take 1 lakh. What they will do furthermore, the Google Drive classes they will give, or they will be asking you to sit and read. So paying 1 lakh anyhow you have to sit and read. That without paying 1 lakh you sit and read. You understood? Be careful. All these things don't believe in. Of course, whatever I am telling also you don't believe. What I am trying to convey is that, you decide, you are matured, you decide, you know the reality, you know how the papers are asked. So don't skip anything, cover everything and go for exam with the objective that even for IBS it will be useful. For IBS there is no separate preparation required. In 5 subjects you are perfect, in IBS you will automatically get marks. Okay, because this guy, he told me, sir, I did not prepare much of group 1, but just based on group 2 itself I wrote, I got 40 plus something. And without any preparation of group 1 or separate preparation itself, people are getting. And I asked many rankers, they said the same thing. So 5 subjects we focused pakka, and automatically IBS we got. Only thing, sir, properly sitting in the exam hall, we should be patient and select which case study to answer and search for the information. Little bit of talent if you have, we will be able to get. And I have seen many people getting 65, 70, 80s and all in IBS. Okay, that's easy. That's not a difficulty, but you should be strong on your regular subject, the remaining 5. So this will be an IBS portion that can be tested there or even in IDT also. Coming back to question number 33, RF Enterprises, a registered supplier located in Madhya Pradesh, has duly filed its monthly GST return for the financial year 24-25. During the scrutiny of the returns for the said financial year, so there is scrutiny assessment so they are doing scrutiny of the returns. The proper officer noticed an inadvertent short payment of CGST and SGST totaling to 4 lakh 60 in the month of October. So short payment means they have not paid 4 lakh 60 on account of bona fide error, means it's not a fraud. It's not a fraud. Before issuance of show cause notice by the proper officer, RF Enterprises paid the tax of 1 lakh on the basis of its own ascertainment along with applicable interest with penalty if any on 15 September and informed the proper officer in writing of such payment. Based on the facts above, answer the following. Ascertain the last date by which show cause notice can be issued by proper officer for the amount of tax short paid by RF Enterprises. 74A. As per 74A, what is the time limit within which the notice to be given? 3.5 years. So see the answer below. 3.5 years, that is 42 months. 42 months from when? Due date of furnishing annual return. Financial year 24-25, the due date is 31st December 2025. From there, 3.5 years. So 2026, 27, 28. So June 2029. So 30th June 2029 is the time limit. Okay. And even if it is on account of fraud, the answer will remain the same. Determine the amount of penalty, if any, payable on the payment of tax of 1 lakh by RM Enterprise on the basis of its own ascertainment along with applicable interest on 15 September. So they are paying before notice. Before notice, correct? Will there be any penalty? No. This is not a self-assessed tax. This is arrears of tax. It's not a self-assessed tax. So therefore, there will be penalty or no penalty? No penalty, because it is 74A other than fraud. Other than fraud, before notice, no need to pay penalty. Thus, no penalty is payable in respect of payment of 1 lakh and no notice will be issued. Okay. Suppose if it is on account of fraud, see, because they are asking, in each of the above case, will your answer be different if the short payment is on account of fraud and other facts remain the same? So you have to write both. What if it is on account of fraud? 15%. 15% of 1 lakh, that will be payable. If it is on account of fraud, 1 lakh into 15%, 15,000 will be payable along with tax and interest. Okay, that will be the penalty, so that the notice will not be issued. Then next. So this question they did not test na September exam. 74A related to penalty they tested. Time limit only they tested. They did not test about the penalty. The discount offer they did not ask. Discount offer they can ask. The discount offer we have na before within 60 days. This is question based on that. Then 3. Assuming that proper officer decides to issue show cause notice under 74A on 10th October, determine the maximum amount of tax for which he can issue the show cause notice. What is the maximum amount of tax for which he can issue show cause notice? If the notice is issued, ascertain the last date by which the proper officer should issue order under 74A, assuming that show cause notice is issued by the proper officer on the said date. First step. So 10th October 10th October means from there within 1 year they need to pass the order and it can be extended for a further period of 6 months. So see the time limit. The time limit will be in this case 12 months from the date of issuance of notice. So they have to pass the order by 10th October 2026 because it is 10th October 2025, 1 year, and it can be extended for a further period also, but that is not given. You can write that. You can write that in exam. It can be extended, and moreover, what is the amount that needs to be paid here? Maximum amount of tax for which he can issue the show cause notice. So full 1 lakh, correct? Plus interest and penalty, correct? 3 lakh 60, 4 lakh 60 minus 1 lakh, okay, sorry. 4 lakh 60 minus 1 lakh, so 3 lakh 60,000. So you can see proper officer can issue the notice for remaining 3 lakh 60, and other than fraud means it will be, so only 3 lakh 60 plus interest plus that penalty 10%. However, if it is on account of fraud also 3,60,000 plus the penalty will be full 100%, that will be there. Then next 4, in continuation of subpart 3 above, if the proper officer issues a show cause notice under 74A on 10th October for the amount of tax so collected and RM Enterprises decides to pay said tax along with applicable interest on 5th December. So 5th December 2025 means within 60 days from show cause notice, how much will be the penalty? 25%. If it is 74A on account of fraud, if it is other than fraud, no penalty. If it is on account of other than fraud, no penalty pa. No penalty shall be payable within 60 days from show cause notice. However, it is on account of fraud, 25%. So 3,60,000 into 25. Why 3,60,000 into 25? Because see here, total 4,60,000, already 1 lakh has been paid. So on the remaining amount only there will be. So that's why on remaining amount only, because it is continuation to subpart 3. Continuation to subpart 3. And this will be the penalties, reduced penalties, etc. You got it? So this is also a very good question. Definitely high chance are there asking this. Question number 34. This 34 I don't think so they will be asking question because already they tested pre-deposit. The appellate authority passed an order against Venue Automobiles Private Limited demanding IGST of 1,200 crores. Venue Automobile Private Limited wishes to file an appeal against the order of appellate authority. The company admits the liability of 100 crore but wishes to litigate the balance amount of demand and thus files an appeal to appellate tribunal. You are required to determine the amount of pre-deposit which is required to be paid by Venue Automobiles for filing an appeal. How much pa? 10% of 1,100 crores. So 10% of 1,100 crores. First you take CGST. What is CGST? 1,100 divided by 2. What is 1,100 divided by 2? 550. 550 into 10%? 55. But maximum is only 20. CGST 20. So therefore 20. Correct? And SGST will be 20. So therefore total how much we need to pay? Only 40 crores as pre-deposit in addition to the admitted due of 100 crores. That 100 crores anyhow we need to pay, plus in the disputed tax only it will be 10% subject to maximum 20 crore under each act. So accordingly 40 crores. So total pre-deposit will be 140 crores. Clear? Even for second appeal also it is same as sir. Won't it be 20%? No. 10% only. 10% subject to maximum 20. Now they have made it equal for first appeal as well as second appeal. And what if it is on account of penalty order? No pre-deposit. For second appeal, no pre-deposit against penalty order under 129. And in case of first appeal, 25%. Okay, what if it is penalty order because of section 122? Penalty order, not on account of 129, but normal other penalty orders, because for levying only penalty also they can levy. Then what will be the case? That is, I told you, only 122. For example, Mr. Amar, Balaji, like that one illustration we saw, in that on the supplier there is only penalty under 122 subsection 1, there is no demand and recovery. So only penalty, so they will be giving a notice under 127 and they will pass a order under 127. 122 penalty alone they are levying, so they will pass a order under 127. If you want you can check the book also, we discussed that. 127 only for levying penalty they will give notice and pass a order under 127. Now in this case, against that order, if you are going for appeal, what will be the pre-deposit? 0, nil. They will give a MCQ like this. You will take 25%. That answer will be there, but that is not the correct answer, because only for penalty order under 129 it will be 25%, but for other penalty there is no pre-deposit. Now they made amendment in new finance act to bring in for all the penalties it will be 10% like that. Previously 25, now they reduced it to 10% for all penalty orders. That's why they might be testing this in exam. Be careful. What is that? That is, apart from 129 penalty, any other penalty, apart from 129 penalty, any other penalty order, no tax, only penalty, there is no pre-deposit. There is no pre-deposit. If you admit that you have to pay. If you are not admitting, there is no pre-deposit on disputed. Next, question number 35. This is related to co-insurance and reinsurance. ABC Insurance Limited, a registered insurer in Maharashtra, is engaged in providing insurance services. During the current financial year, the company entered into following transaction. ABC Insurance Limited enters into a co-insurance agreement with XYZ Insurance Limited, where ABC Insurance Limited is the lead insurer. The insured, Gyati Industries, pays a total premium of 50 lakhs, which is apportioned by the lead insurer, ABC Insurance, between itself and XYZ Insurance in the ratio of 60:40. Means out of 50 lakhs, 40%. So 50 into 40% is 20 lakhs. They are giving it to, so another one, that is XYZ Insurance. And for the insurance service jointly supplied by them to Gyati Industries, ABC Insurance Limited agrees, this is the core point, ABC Insurance Limited agrees to discharge the entire GST liability on the full amount of premium received from Gyati Industries, which means ABC Insurance is paying GST on the gross premium received as a lead insurer. So therefore GST payable by them will be 50 lakhs into 18%. Then the share of insurance premium received by XYZ Insurance, the co-insurer, that is 20 lakhs, is excluded from supply as per 7 subsection 2 read with schedule 3 of CGST Act. That is what we need to write in this case. That's the answer for this. XYZ Insurance does not pay GST on the share of premium separately because it is excluded from supply. Then next one, a large industrial plant, and suppose in this question if they give ABC Insurance Limited agrees to discharge the GST liability on the share of premium retained by them, then on 30 lakhs they will pay GST and XYZ Insurance will receive 20 lakhs. On that, XYZ Insurance will pay GST, that is not excluded from supply. Number 2, a large industrial plant needs an insurance worth 500 crores. It approached ABC Insurance Limited for the same. However, since ABC Insurance is unable to underwrite the entire risk alone, it enters into reinsurance agreement with reinsurer PQR Insurance. The total premium charged is 50 lakhs. The insurer ABC pays a reinsurance premium of 20 lakhs to PQR. This allows ABC Insurance to manage the risk and financial exposure. While paying this amount to PQR Insurance, ABC deducts a ceding commission of 1 lakh, which means how much they are going to give? 19 lakhs, correct? Sir, you are PQR, reinsurer. I am main insurer. Now I have to give you a premium of how much? 20 lakhs. But for this 20 lakhs, you have to give me commission. How much? 1 lakh. Which means net amount I will be giving you 19 lakhs. 19 lakhs. Which it has discharged for the service it provides to PQR. PQR Insurance pays GST on the gross reinsurance premium including the reinsurance commission. Means you pay GST on what? 19 or 20 20 lakhs. Now I am earning 1 lakh from you na commission. For that commission I am providing service to you. Is it covered under supply or excluded from supply? Excluded from supply because you pay GST on 20 lakhs even though net amount you received 19 lakhs. If you pay your PQR, if you pay GST on 19 lakhs, that is if the line says that PQR Insurance pay GST on the net insurance premium received by them, then on balance 1 lakh I have to pay GST because that is my commission. So the insurer should pay GST and that is not excluded from supply. So that is the answer for this. Reinsurer is liable to pay GST on gross insurance and the insurer including of ceding commission 1 lakh. So the insurer receiving the commission is excluded from supply. That is this. Then question number 36. It's a comprehensive question. Say this. 2 more comprehensive questions I have given. This and one more one related to these events. Sitaram Industries Limited, a registered entity under GST in the state of Karnataka, is engaged in manufacture and supply of both taxable and exempted goods and services. Both taxable and exempted goods and services. Means common credit, reversal, all those things will be there. Following information for the month of October 2023 is provided by Outward Supplies. Sold an old warehouse building in the state of Karnataka to a retail giant in the same state. So it is actually statement 1 and it is excluded from supply because it is sale of building and therefore it is not coming under consideration received before obtaining completion certificate, it is after, because the building is we are selling excluded from supply. However, for ITC purpose it is treated as exempted supply, like that you need to write in the note and keep it. So because while doing the ITC reversal, keep this 30 lakhs as exempted turnover. Next. So therefore the answer in the first statement, sale of old warehouse building, exclusion from supply, there is no GST. Then second transaction, supplied 30 lakhs over the counter to Mr. Sudhakar, an unregistered buyer who took it to his residence in Haryana. Invoice issued to him mentions only his name and state. However, his complete address of Haryana is missing in the invoice. Now, supply involves movement or does not involve movement of goods? Does not, because it is given in the counter, means does not involve movement of goods. He is only coming and taking the goods and taking to his place. Supply does not involve movement of goods. B2B or B2C? B2C. We need to take location of recipient in the records of supplier. Do we have the location of recipient? Yes. See, just the state is sufficient, not necessarily detailed address is required. So location of recipient in the records of supplier, that is Haryana, and it will be supply, taxable supply, goods taxable unless given as exempted taxable, and it is interstate chargeable to IGST. So statement 1. So in statement 1 we will take 12 lakhs and on that GST will be payable. But related to this they have given one point. Okay, so special boxes for packing of the laptops. Now apply composite supply to this. Composite supply, because packing will be coming under naturally bundled in the ordinary course of business, and definitely it should be included as per 15(2)(c). Any incidental expenses should be included in the value. So therefore 12 lakhs plus 1,30,000. Moreover, the rate also, the rate applicable to laptop will be taken. See the rates. Rate of CGST, SGST, IGST 9, 9 and 8 respectively for both inward and outward, except for special packing for which the rate of GST is 12. But applying the composite supply, for packing also we take the same rate. See, just because it is included in value does not mean that it will be composite supply. Valuation is different, application of rate is different. So valuation, it will be added to the value of supply, that's okay. But for rate, what should we do? Should we take it as composite or mixed? That will come into the picture. It is composite because it is naturally bundled in the ordinary course of business. So due to that reason, we will take 18% IGST. So 13,30,000 into 18%, 2,39,400. Got it? Next. C. Provided direct selling agent service to Kumkum Bank registered in Karnataka. Now, first of all, is it taxable? Yes. Direct selling agent, we don't have any exemption. It is taxable. It is supply. Is it FCM or RCM? It is our outward supply, FCM or RCM. Direct selling agent will come under RCM if supplier is other than body corporate or firm. Is the supplier other than body corporate or firm? No, body corporate. So it is FCM. They only will pay GST 4 lakhs. And direct selling agent service, so where it will be coming, we don't have any specific provision. So general provisions, correct? Direct selling agent services for section 12 we don't have. Only for section 13 intermediary service, location of supplier, like that we have, not for 12. So general provisions, location of recipient, that is bank in Karnataka. Where is this guy in? Karnataka. So therefore it is intrastate supply. So see the answer, 4 lakhs. C GST, SGST, clear? And we will take general provisions, 12 subsection 2 of IGST Act, and it is covered under FCM since the service is provided by a person other than individual. So if the supplier is other than body corporate or firm, then only it is RCM. Next one, provided pure labor service pertaining to a single residential unit in Mumbai, Maharashtra, otherwise than as a part of residential complex, for erection and installation of renovation works for a client registered in Maharashtra. Won't it be exempted? You ask me, this question. So won't it be exempted? No. Why it is not exempted? Sir, single residential unit, only construction service is exempted. Repair and maintenance is not exempted. So renovation will fall under repair and maintenance. Just because pure labor service is given, don't conclude. So only construction is exempted, repair, renovation or all other things will be taxable. So it will be taxable, not covered under exemption. First supply, taxable. And we don't have any RCM for construction services. And for construction service, we need to take service in relation to immovable property. What is the place of supply? Location of immovable property. Where is that located? Maharashtra. This person is in Karnataka. Therefore, it will be chargeable to IGST. 6,20,000 IGST 1,11,600. Service in relation to immovable property. Location of immovable property is the place of supply. And single residential unit, otherwise that's a part of complex, only construction service is exempted. Erection and installation of original works, but not repairs. However, such service in relation to renovation work not exempted. The next one, provided free of cost training in a resort in Puducherry to its agents based in state of Karnataka on effective use of the products of the company. Already we discussed this in one question. Not a supply. 7.1c. 7.1c, only principal agent transaction with respect to goods, but it is service. So due to that reason, that should not be taken. Okay, not a supply. Then next, actually in value also you should not include, because it's not a supply na. So in the value also you should not include. You should take it as nil. Otherwise it so happen that while counting we will take that also into the turnover. It should be taken as nil. Then next one, interest received on fixed deposit from Sulakshan Bank registered in Karnataka, exempted. Interest on loans, advances, deposits is exempted, but for ITZ it will be treated as taxable. So you take 2 lakhs. Where is that interest? Interest 2 lakhs, it will be exempted. But keep in mind, for ITZ purpose, it will be treated as taxable. Then next one, we have inward supply, but wait, let's complete the first statement. Look into the additional information to check whether we have any outward supply. In respect of sale of old warehouse building, the stamp duty was paid on 32 lakhs. Means for sale of warehouse building, we need to take 32 lakhs in the value. Correct? No, that is for securities. For ITZ purpose, means in this value, we should be taking 32 lakhs for ITZ purpose. For ITZ purpose, we should take 32 lakhs. Then, the company has provided a corporate guarantee of 2 crore to Lakshmi Logistics Limited, its related company having registered office in the state of Karnataka, for loan availed by the latter from Jan Bank Limited, Karnataka. Related persona, yes. Corporate guarantee, what will be taken? 1% of guarantee per annum. We don't have the period. So 1% of 2 crores or actual consideration we don't have, whichever is higher. So, and it is how much? 2 crores into 1%. 2 lakhs. And what is the nature of supply? Corporate guarantee. We don't have any provision related to this. Specific provision, general provision, location of recipient. Where is that? Karnataka. So intrastate supply, say this. 2 lakhs, CGST, SGST. So 1% of guarantee per annum or actual consideration, whichever is higher, that is 1% of 2 crore, 2 lakhs. Then any other outward supply? The accountant of company did not claim ITs in respect of debit note rate. That's it. So we completed all the outward supplies. You need to take the liability. So this will be statement number 1. 3,51,000 IGST, 54 CGST, 54 SGST. Now we need to analyze inward supplies and put it under 2 statements. Received a debit note in respect of inward intrastate taxable supplies received in the financial year 2021 for the quantity difference as agreed. These inward supplies were used for all goods manufactured in the factory. Date of debit note is 16th October. Debit note we received When we receive the debit note, we can take ITC with respect to that na? Yes or no? Yes. And the accountant of the company did not claim ITC in respect of debit note received for the reason that the original purchase related to the earlier for which ITC eligibility was over. It's okay, but for debit note only we need to see. Debit note received in the financial year 2021 for the quantity difference, and the date of debit note is 16th October 2023. Invoice may be for earlier financial year, but debit note is this financial year. We can take ITC, right? Right now we are doing the computation for which month? October. So we can take ITC, so it will directly come in third statement. What is that third statement? ITC available, debit note received. And it is CGST, SGST. Why CGST, SGST? See there, intra-state taxable supply. So CGST, SGST. Solar panels installed in the factory for providing electricity to be used in factory, 5 lakhs. First, can we take ITC with respect to this? No. Why? Why? Solar panels installed in the factory for providing electricity to be used in the factory. So solar panels will come under immovable property. No, immovable property. Construction of immovable property. Any goods for purchase for construction of immovable property will be blocked credit. Now sir, I have a doubt. Won't it come under plant and machinery? Won't it come under plant and machinery? See, it will come under plant and machinery, but that plant and machinery should be used in the business for making outward supply of goods or services. So here they said it is used in the factory, but nowhere it is said it is used for the purpose of outward supply of goods or services. Due to that reason, so they have not given the ITC. But in reality, this is based on one case law they made it, but in reality, ITC is available in reality. But as the ICA has given the answer like this, so we need to take it like that. So please see the answer, you will understand. ITC cannot be claimed in respect of solar panels since ITC on goods or service are both received by a taxable person for construction of immovable property other than plant and machinery on his own account, including when such goods or service are used in the course or furtherance of business, is blocked ITC. So because of that, but reality, this is based on one case law they have given pa, but the reality is that that particular case law they went on appeal and the appeal is admitted also. So definitely ITC is available on the solar panel purchase, because in turn that electricity is used in the course or furtherance of business. Then why sir they disallowed? They disallowed on the ground that this plant and machinery is not used for making supply of goods or services. For that reason, what if they generate electricity and supply that electricity? Again wait. Are they utility or not utility? If they are utility, then it is exempted. If they are utility means they should get the license to do that. They need to get a license to do that, to give it to the general public. Then it will be coming under utility. So if it is a utility, then it is exempted. What if they are not a utility, means they are not covered under the act, any electricity act, etc. Then they can generate and give it to their companies, related companies, etc., sister concerns, etc. Then it will be taxable. Sir, electricity transmission and distribution only by a electricity transmission or distribution utility is exempted, but others will be taxable. So accordingly it will become taxable, and then they can take ITC with respect to that, because they are not utility. Nowhere it is given that they are utility. So that you need to check. Maybe that point also will be twisted. So here ITC not available on this 5 lakhs. Purchased employee uniform for 1000 employees interstate. Uniform worth 3 lakhs were necessary to ensure the safety of the workers while carrying out the manufacturing activity. Remaining uniform worth 4 lakh were sometimes worn by employees outside the factory for personal purposes. Now, personal purpose they cannot take ITC, but 3 lakhs they can take ITC, correct? And we don't have anything in RCM here. So ITC uniforms purchased only to the extent of 3 lakhs. And is it given that it is interstate? So purchased uniforms interstate like that is given. So IGST. So 3 lakhs into. So why on the remaining amount we will not be able to take ITC, that 4 lakhs? Personal purpose like that it is given. So for that they cannot take. It is actually purchased goods distributed as gifts or free samples. Okay. And lot of companies will do this. What they do, they give the t-shirts to the employees and the employees will be wearing it. And if they mandate that you have to wear it for every Saturday, okay, then It will come under uniform category. Uniform category, because if they are mandating it that they have to wear, everyone should wear it, then automatically it will come under the uniform category. So therefore they can take ITC. Whereas if it is optional, if you want you wear, otherwise also not required like that, then in that case it is not coming under the uniform category, it will come under purchased goods distributed as gifts or free samples. They cannot enjoy the ITC with respect to this. What if they are selling the t-shirts? What if they are selling the t-shirts? Then it will become supply, 71A. They are selling it, consideration is there, then it will become supply. Can they take ITC on the t-shirts purchase? Yes. That is with respect to this, and we don't have any other transaction in inward, and all other points we discussed. Now we will move on to the reversal of ITC. First, what is the ITC availed? 54,000, 36,000 and 36,000. Now you need to reverse the ITC because all these three are common ITC, correct? Out of that only first and third one is only there, common ITC. We need to reverse. How to reverse? Into exempted turnover divided by total turnover. So common credit on debit note uniforms is there. And what is the exempted turnover by total turnover? Can you please tell me the exempted turnover alone? 32 lakhs plus direct selling agent, pure labor, no, only 32 lakhs, correct? Only 32 lakhs divided by total. What is the total? 32 plus 13 lakh 30 plus 4 lakh plus 6 lakh 20 plus 2 lakhs plus 2 lakhs. Both total, in total it will come. How much? You understood how we got 59 lakh 50,000? 32 lakhs divided by 59 lakh 50. Interest on loans, advances, deposits is taken as taxable, not taken as exempted. Okay. And corporate guarantee should be taken because we pay GST on that. But one more point is there. What is that? Even though it is there, but we have, it is not a supply, free training to agents. So that is not taken. And 32 lakhs, 54,000 into 32 lakh divided by 59 lakh 50, then 36,000 into 32 lakh by 59 lakh 50. So this much you need to reverse the ITC. So the balance is the net eligible ITC. So common credit availed minus reversed. So net eligible ITC 24,958 and 16,639, 16,639. Now this you need to adjust with our liability. All the liabilities are less than this. So we will get net GST payable. Only special point in this is about reversal of ITC. Common credit reversal. Done. So this is one comprehensive question. Look into question number 37. ABC Limited, a unit in SEZ, receives services from XYZ Limited. Concentrate pa. This is little tricky question. ABC Limited, a unit in SEZ, received services from XYZ Limited in relation to authorized operations as well as other operations in SEZ during the month of May 2024. The following details are furnished for the month of May. Value of taxable services used exclusively for authorized operations within SEZ 8 lakhs. Value of taxable service used partly for authorized operation and partly for non-authorized operation 9 lakhs. Value of taxable service wholly used for non-authorized operation 7 lakhs. Export turnover of SEZ unit 90, domestic turnover 60 lakhs. Compute the ITC that can be availed by ABC and amount of refund if any, if the applicable rate of GST is 18%. See, first, value of taxable services used exclusively for authorized operations means the supplier who is supplying it to SEZ will treat as zero rated. When he treats it as zero rated, he will not charge any GST to SEZ. Correct? Either he will go for pay IGST and get refund of IGST, or they will go for without payment of IGST, but whatever the case may be, they will not be charging GST to SEZ, so SEZ will not have any ITC. So, say this, as per section 16, supply of goods or service to SEZ unit. Generally we will think from supplier point of view. Now we are seeing from the SEZ perspective, recipient perspective. To their authorized operations are treated as zero rated supply. Consequently, the supplier of such service claims refund under either of the options and shall not charge GST to SEZ unit. However, when the supplies are for other than authorized operations, then it is not a zero rated, shall charge GST to the SEZ as the supplier is not eligible for any refund. So, in case such GST paid by recipient can be availed as ITC and can claim refund of ITC upon making export. So, SEZ can claim refund of ITC, but first for that they should have availed the ITC, means they should have paid the GST. When they receive services for authorized operations, the supplier will not charge GST to them. So, there is no question of GST paid on purchases. Value of taxable service used partly for authorized operations and partly for non-authorized operations. Can the supplier treat it as zero rated supply? Do we have any breakup? No. No breakup, means the supplier cannot treat it as zero rated, because for the supplier, what is zero rated supply? Only if it is supplied to authorized operations. In this case, it is not supplied to authorized operations, which means the supplier will charge GST. For supplier, it is like a normal supply. He will charge GST and SEZ will take ITC. How much? 90 lakhs into 18%, 1,62,000. Remember, only for exclusive authorized operations, it is zero rated. Otherwise, it is not zero rated. Then, value of taxable service used wholly for non-authorized operation. Means for supplier, it is not zero rated. Correct, apa? So, he will charge GST. So, SEZ will take ITC. So, 7 lakh into 18%, that will be 1,26,000. So, it is a total eligible ITC. 1,62,000 plus 1,26,000, 2,88,000. Now, this is the ITC. What SEZ is doing? Export and domestic turnover. Now, will they get refund on account of unutilized ITC? Yes. They are making zero rated in turn. So, can they take ITC refund? Yes. What is the refund? Net ITC 2,88,000 into export turnover divided by total turnover, that is 90 divided by 150. So, 1,72,800 they will get as a refund. Good question, no? So, we are not seeing it from the supplier. Usually, we see everything from supplier point of view. It is from the SEZ perspective we are discussing this. Next, question number 38. XYZ Limited, a registered entity under GST, was found to be involved in fraudulent activities relating to GST audit conducted in July 2022. The audit revealed that XYZ Limited has issued fake tax invoices worth 60 lakhs to PQR Limited during the period from January 2022 to March 2022 without making any actual supply of goods or services. The applicable GST rate on these invoices was 18%. On the basis of these invoices, PQR Limited fraudulently availed ITC of 10.8 lakhs and PQR further utilized ITC to discharge its GST liability on outward supply valued 80 lakhs. So, say this, first XYZ is the entity. They are involved in fraudulent activities during an audit. XYZ has issued fake tax invoices during the period January to March without making supply. Means on XYZ, is there a liability? No, XYZ there is no liability. Means recovery will not come under 74A. But XYZ has to pay penalty under 122 subsection 1 for invoice default. Correct, apa? Invoice without supply. And the applicable GST rate on these invoice was 18%. So, please calculate the penalty on XYZ 122 subsection 1, 60 lakhs into 18%. 10.8 lakhs is the penalty payable by XYZ, whichever is higher, or 10,000 whichever is higher is 10.8 lakhs. Correct? Then next, on these invoices, PQR Limited fraudulently availed ITC of 10.8 lakhs and utilized this ITC to discharge its GST liability on outward supply valued at 80 lakhs. And applicable rate of GST on outward supply was 18%. Now what they did, 10.8 lakhs they utilized for payment of GST on their outward supply. What is their outward supply? 80 lakhs into 18%. How much? 80 lakhs into 18%. 14.4 lakhs means entire 10.8 lakhs they would have utilized. Correct? Now there will be recovery of 10.8 lakhs under 74A. Under 74A, because to that extent they did not pay tax, under 74A the recovery will be initiated and the penalty will be under 74A, which is 100% of ITC wrongly availed, fraudulently availed. So on PQR there is recovery under 74A. As per that recovery they need to pay penalty under 74A, which is 100% of ITC. Clear? And it was also found that PQR Limited issued fake invoices amounting to 30 lakhs to DEF Limited without any underlying supply of goods or services, enabling DEF Limited to fraudulently claim ITC of 5.4 lakhs. Now, they gave fake invoice of 30 lakhs on which GST will be how much? 5.4 lakhs. So therefore, no recovery because they have not made supply. Fake invoice only, they have not made supply. So there will be penalty under 120 subsection 1 on PQR. So there are two penalties on PQR, one under 74A, another under 120 subsection 1 for 5.4 lakhs. Now what about the recipient? That is DEF Limited. DEF Limited just took the ITC, but they have not utilized. So therefore wrong availment of ITC penalty will be under 120 subsection 1. Why 74A not applicable? Because they are not utilizing it against their liability. Calculate the penalty that may be imposed on XYZ, PQR and DEF Limited under the provisions of CGST Act for issuing fake invoices, availing fraudulent ITC and passing on ITC without actual supply of goods or services. So accordingly you need to write on XYZ 120 subsection 1 60 lakhs into 18%, 10.8 lakhs. On PQR 2 penalties, one under 74A, that is 10.8 lakhs because they have availed the ITC. Another under 120 subsection 1 for invoice default 5.4. On DEF only 120 subsection 1 5.4 lakhs. So good question, no? This question is actually there in your study material. This is your study material question, but they did not give it in test your knowledge questions. In offence and penalties, they gave some big case studies. In that they have given this. I just minimized. It's a miniature version. They gave a lot of crap and all. I eliminated that. The soul of that question I took and I have given, because in exam also they will be making a question like this for 5 marks. Got it? Then question number 39. Filmfare Corporation is an association of persons, and but don't ask me separately in Telegram, sir, I want to know the source of each and every question. Can you give me the source? I have taken from different places and I modified this, adapted it, etc. and all. So therefore I cannot give you the source, etc. Then again I have to sit from where and all I have taken, I cannot take pa. So that's why please follow. Don't ask me from where you have taken. Why you want to take classes, sir? No, na. You want to write the exam. Happily write the exam. Okay. Then I am getting fear nowadays to go into Telegram itself. That's why I am not clarifying the doubts and all that much. And but don't worry, I will. Genuine doubts I am clarifying, and I created one AI tool pa. So that AI tool I will be posting it. So in the group where you are there, so you can get your queries clarified. You can ask the query. So we have built one AI bot. So that AI bot using OpenAI and N8 like that. So it will first give me the query and it will also give me the answer. I can edit it, and when I edit it, I will be typing. If it is okay, I will click OK. If not, I will edit and give. Now I am training one model. So SML, small machine language. So it will get trained so that like me only it will start replying in future. Okay. So because I could not handle the questions, that's why we created it. So we spent close to 1 lakh rupees on this, and we have this. I will just add it. Right now it is in a beta version. It is in a trial stage. So you can start asking whatever queries you have and let it suffer. Question number 13, and we are working on couple of projects like this in future also, wherein the same, like myself, I will only be taking indirect tax in all the languages. In all the languages, not dubbing. It is in the same voice, my voice only, and even lip sync also will be there. Everything will be proper. Just a AI tool, we are just working on it, and wherein you can choose the language. If you want to listen in Tamil, you can choose. You can listen in Telugu, or you can listen in Kannada, Hindi. You can choose that. Okay. Just we are working on it also. So Filmfare Corporation, and not only that, all subjects same faculty. So the database is same, database is common, and you can choose. It is like the next version, that is first version. Second version we are going to keep lot of skins. Say same IDT, but you don't want to listen from me, but the same knowledge you need. But say you like, say Valentina Nappi or some other actress, or Johnny Sins, like that. You can choose their skin and they will take IDT classes for you. So because we connect with the people very much, so you can choose who should take class for you also. Knowledge is same. Okay. Then nice, no? What I am telling is not a lie. We are working on it. I don't know how many days it will take. We are doing it, and I don't know to what extent it will be coming out thanks to AI. So it is giving us all the scope, etc. and all. And you have to pay for the skins. Different skin will be there. You have to pay for it. So how you wanted to listen, etc. and all. Then, a lot of money invested. When it will be recovered? Because I have to pay royalty to them. Valentina Nappi will file a case on me. How can you use my face and how can you do this like that and all? Okay. Don't search these names and all in Google, please. Filmfare Corporation is an association of persons registered in Mumbai, Maharashtra. They are known for conducting award shows in various locations in India and abroad. During December 2019, they conducted 2 award functions, the details of which are as follows. Award function in Hyderabad, Telangana, award function in Dubai. Revenue from sale of tickets, 10,000 tickets for 400 rupees each sold to audience residing in India. So total 30 lakhs, 7,500 tickets for award function in Hyderabad and 2,500 tickets for award function in Dubai. Now what is the GST implication on this? Exempted, why pa? Ticket price does not exceed 500 rupees for a award function is exempted. Consequently, GST is not payable. So see the answer below. 7,500 tickets sold to audience in India with respect to event in Telangana, as well as 2,500 tickets, both are exempted as the ticket price per person does not exceed 500. Next, second. 2,000 tickets of 1,200 each sold to audience residing outside India. What about this? Taxable. Because if the ticket exceeds 500 rupees per person, it will be taxable. So this 1,200, so therefore it will be taxable. But you check, will it be qualifying for export, etc. and all. In case of admission to an event, what will be taken as the place of supply? Whether it is 12 or 13, location of event. What is the location of event? Telangana. Where is the supplier located? Maharashtra, India, and event also in India. Therefore, it will not qualify for export of service even though the recipient is outside India. So it will be taxable. So see there, 24 lakhs, not exempted as a ticket price, exceeds 500. Supplier Maharashtra, recipient outside India, place of supply under 13, location of event that is Telangana, and it is deemed interstate supply chargeable to IGST. Why? If you are determining place of supply under section 13, it is deemed interstate supply. Okay. Then next one, 8,000 tickets of 2,400 each sold to audience residing outside India with respect to award function in Dubai. Again, so this 2,400, it's not covered under the exemption. Now we will check location of supplier Maharashtra, location of recipient outside India, place of supply 13, that is location of event, that is Dubai. Supplier in India, recipient outside India, place of supply outside India. It will qualify for export of services. Export of services, and it is 0 rated. So 1 crore 92 lakhs is the value, not why we need to bother about it. Okay, So we'll take the assumption that consideration is in convertible foreign exchange. It's given. Last it is given. Amount towards tickets sold to audience outside India is received in convertible foreign exchange. It's export of service. Supplier and recipient are not two establishments of the same person. Moreover, the question is not about refund and all. Just the GST payable. Now for export of service, what we will take? With payment of GST or without payment of GST? Question is silent. They did not give. So without payment of GST. And therefore here export of service and it is 0 rated. The next one you see. Shreya Arts, a event management company registered in Karnataka, provides services by way of organizing an event for consideration. So what is this? Provided event management service, organizing an event. For organizing an event, what is the location of supplier? What is the location of supplier? Karnataka. And what is the location of recipient? Maharashtra. Therefore, organizing an event, section 12. So we should check B2B, B2C. It is B2B. So location of recipient. The recipient is Filmfare Corporation. So therefore, it will be Mumbai, Maharashtra. And you need to see this. Event management services. Event management services from Shreya's Arts, but that is their inward supply, not their outward supply. Inward supply. So with respect to event in Telangana, supplier is Karnataka, recipient is Maharashtra, place of supply is Maharashtra. It is interstate supply and chargeable to IGST. And can they take ITC? Very much yes. We don't have any restriction. So 14 lakhs into 18%, 2,52,000. And one more amount also, 28 lakhs for event in Dubai. So see this. So again supplier Karnataka, recipient Maharashtra, place of supply, B2B location of recipient Maharashtra, interstate supply chargeable to IGST, and IGST credit they can take 5,04,000, 2,52,000. Understood Appa? That we are keeping under second statement because it is our inward supply. Then next one. A to Z events, an event management company located in Dubai, provided service by way of organizing an event for a consideration. Now again, section 13. For section 13, always location of event. For organizing an event, we don't have to check B2B, B2C, always location where the event is held. Now again you see. So event management services, A to Z events, supplier Dubai, recipient Maharashtra, place of supply, section 13, location of event Telangana. It will become import of services chargeable to GST under RCM. Supplier outside India, recipient in India, place of supply, import of service, IGST payable under RCM. So remember it will come under RCM liability. Also we can take ITC with respect to this. Two adjustments. Then next one. So supplier, this, what about this? 32 lakhs. 32 lakhs, no GST. Why no GST? Supplier Dubai, recipient in Maharashtra, place of supply under section 13, location of event Dubai. When supplier and place of supply both are outside India, remember supplier and recipient outside India exempted. Supplier and place of supply outside India, there is no GST, no levy. Then next, all points in place of supply I have covered in this question. Next one. So look into various actors and actresses based at Maharashtra performed classical dance in the event. Again that is inward supply. 3 lakhs for 3 performances. 3 lakhs for 3 performances exempted. Correct? Why? Classical dance. Performance artist. So therefore it will be exempted. So see here. Classical dance performance exempted as a consideration per performance does not exceed 1,50,000. This question credit is mine only. It is not given anywhere. I only created it. Lot of time it took to create this question. And next 4 lakh for 2 performances. What about that? Taxable. By per performance it exceeds 1,50,000. It will be taxable. And again we need to analyze. So see this. Not exempted as a consideration per performance exceed 1,50,000. Supplier will be Maharashtra. Recipient also Maharashtra. Place of supply, general provisions. We don't have anything. So therefore, general provisions, it is intra-state supply Maharashtra, and CGST is GST paid. Next. Fangs Technologies Private Limited gave money for title sponsor. What about this sponsorship? Sponsorship is covered under RCM if the supplier is other than body corporate and recipient is body corporate or firm. Who is the recipient? Fangs Technologies Private Limited. It's an outward supply for Filmfare. Filmfare is other than body corporate. AOP, other than body corporate, and recipient is body corporate. Therefore, it will be covered under RCM. So, in this case, sponsorship services to Fangs Technologies taxable under RCM as supplier is other than body corporate and recipient is body corporate, and for ITC purpose it is treated as exempted supply. When my outward supply is covered under RCM, it is treated as exempted for ITC purpose. Then next, Loot Academy owned by individual also gave a title sponsor. What about this? Supplier other than body corporate, but recipient is also other than body corporate, so it will be FCM. Sponsorship service to Loot Academy taxable under FCM in the hands of supplier as recipient is other than body corporate or firm, and supplier will be Maharashtra and location of recipient not available. So therefore location of supplier only will be taken as the place of supply. When location of recipient not available in the records of supplier, location of supplier, and it will be intrastate supply. Next part, other inputs and input service received for the event from outside Maharashtra, 6 lakhs and 12 lakhs. So that is related to credit. So 6 lakhs and 12 lakhs IGST credit, that will be taken. 1 lakh 8,000, 1 lakh, 2 lakh 16,000. So we analyzed. So far what we did is we analyzed everything and all amounts are exclusive of GST, GST rate. Filmfare opted not to pay IGST with respect to export of services, that is given, and amount towards tickets sold to audience. Compute net GST payable. Now we got all the data. Let's start. What is the gross GST payable? Gross GST payable. So look into the data, please look into the data. Here 24 lakhs, which and all is intrastate, interstate, like that. 24 lakhs IGST. So 24 lakhs into 18%. How much? 4 lakh 32 IGST liability. And they did not ask separation, but we will try to do that, and this will be intrastate. Remaining and all will not come. So 12 lakhs into 9%, 9% CGST, SGST, 2 lakh 16,000. So 6 lakh 48,000. Okay. And next, ITC. What is a gross ITC? See this, say this. Event in Telangana, IGST credit 5 lakh 4 and 2 lakh 52. This also IGST credit 72,000, but here CGST, SGST, remaining and all IGST. So 36,000 and 11 lakh 52,000 will be taken as the gross ITC. But we need to reverse proportionate to exempted. What is exempted? Please see, what is exempted turnover? 30 lakhs plus 10 lakhs. Next, supply under RCM also exempted 16 lakhs. Please do the total. 30 plus 10 plus 16, how much? 56. So into 56 divided by total turnover. Take the total turnover 284 lakhs divided by 284. Are you understanding? Then you will get minus exempted. You need to reverse proportionately. Net ITC available. This net ITC you can adjust with the liability. But RCM liability separately you need to pay. GST paid under RCM. So the net GST payable will be 72,000. Even though we have lot of credit, but entire credit will be used for payment of liability. However, the RCM liability we need to pay. What is the RCM liability? Import of services 72,000, that needs to be paid separately. So 72,000 is the answer. This question covers exemptions, place of supply mainly, and then reversal of ITC and computation of net GST payable. Then last question in GST, say this. Determine whether GST is payable in respect of each of the following independent services provided by registered persons. Service provided to a government authority by way of slum improvement and upgradation. What is your answer? Exempted. Services provided to governmental authority. Yes, few activities are exempted. What are they? slum improvement upgradation, water supply, sanitation conservancy, solid waste management, public health, correct? That. Then fees of 20,000. What if the first point is to government? Then also exempted, pure service. Then second, fees of 20,000 collected from office staff for in-house personality development course conducted by Barnard C. Das College, providing education as a part of curriculum for obtaining a qualification recognized by Indian law. What is this? 20,000. Exempted? Yes. Services provided by an education institution to its students. It is by institution. To its staff. Students, faculty and staff is exempted. Therefore, this will be exempted. Bus fees collected from students by RSPD college, providing education as a part of curriculum. Exempted. It's not service provided by to education institution. It is service provided by education institution. Whatever may be the fees, that is exempted. If it is to education institution only, we need to check. Only category 1 it is exempted, other case it will be taxable. Housekeeping service provided by Buff Limited to Bloom Montessori. This is to education institution. Category 1 for cleaning its playground and classroom for 30,000 per month. Exempted. Why? Security and housekeeping to category 1 education institution within the premises. Exempted. Growbet supplied gratitude jot, an online educational journal to students of UKG class of Seats Montessori School. Taxable. Why? Only to category 2 it will be exempted. To category 1 education institution it will be taxable. Category 3 also it will be taxable. So this is a simple question. This is your past exam question only. Because I did not cover any question on exemptions, I gave it. Okay. Next. With this we completed GST related 40 questions I have given. Then question number 41 to question number 50 is related to customs. So look into this. Question number 41. One second. Say this. Messrs. Maxline Corporation, not in EOU, had imported technical instruments from USA at a value of 180 lakhs on payment of customs duty. Later the same instruments were sent back to the supplier for repairs. Imported goods exported for repairs. So then the supplier offered 50% discount on fair cost of repairs and Maxline Corporation paid $15,000. Means, so $15,000 is after 50% discount, but what should be the fair value? $30,000. Additional details, bill of entry and arrival of aircraft. So what should be taken for exchange rate? We need to take bill of entry. Bill of entry, what is the CBIC notified rate? 62. So 15,000 plus 15,000, because 30,000 into 62. Please do 30,000 into 62. 18,60,000, and whenever the imported goods are exported for repairs on re-import, we need to pay customs duty on fair value of repairs plus freight and insurance both ways as per notification 45 of 2017. So freight and insurance both ways you take 20, 30, 80, 1,20,000. Sir, should this air freight be restricted to 20% of FOB? No, you take the actual air freight, because this notification will override rule 10. As per notification, they have defined this is the way in which you need to take the value. So that way only you need to take the value. Don't check with 20% of FOB etc. and all here. So take full actuals. How much you got? 18,60,000 plus 20 plus 30 plus 80 plus 1,20,000. 21,10,000. And what are the conditions? From the date it is exported for repairs, it should be brought back within 5 years. Correct? And it can be extended for a further period of 2 years, but it is within 3 years. The export and imported goods are same, ownership remain unchanged, so all the conditions are satisfied, and export was not from a warehouse. So if it is export from a warehouse, then on import we need to pay the full customs duty, because initially we did not pay the customs duty, and repairs did not amount to manufacture. Compute the assessable value. What is the assessable value? 21,10,000, and total customs duty payable. What should be taken as the relevant date for rate of duty? Date of presentation of bill of entry or arrival, whichever is later. Which is later? Arrival. So as on that date, how much is the rate? 15%. So we need to take basic customs duty 15%, social welfare surcharge, even though not given in the question, we need to take 10%. And the IGST rate is given at 12%. So take the 12%. While doing the 12%, you need to add workable value, social welfare surcharge, everything. Then on the 12% should be taken. This is the total customs duty payable. Clear? Next, this is on exemptions. Question number 42. Messrs. Xenon Minerals Limited imported 500 units of minerals under high sea sales for resale in India. The selling price is exclusive of duties and taxes. Additional information: freight from port to depot 10,150 and insurance from port to depot 1,250. Basic customs duty 12%, social welfare surcharge 10%. No IGST is applicable. The sales data for identical minerals during the same period is as follows. You are required to compute the assessable value and total customs duty payable under Rule 7. This is a unique model of Rule 7. What is Rule 7? Deductive value. Deductive value. We need to take the selling price in India and minus all post importation expenses. You will get the price prevailing at the time and place of importation. First we will take selling price, but what selling price should be taken? Rule 7 says you need to take the price at greatest aggregate quantity. The selling price is after import the goods are sold. So at different prices it is sold. You take the price at greatest aggregate quantity. You see this. Rule 7 of customs valuation. So Rule 7 says in second. Website itself not working properly. Fine, pa. It is, you trust me, yeah? Okay, fine. So Rule 7 says we need to take the price at greatest aggregate quantity. What is the price at greatest aggregate quantity here? That's what. Tell me what is the price at greatest aggregate quantity? 95. So 95, because at 500 units 95 is there. Like that you take and then multiply with the 500 units. So 95 into 500 units. Price at greatest aggregate quantity minus post importation expenses minus all the post importation. So 95 into 500, 47,500, and that 47,500 minus post importation expenses. So you will be getting correct, and your answer will be absolutely wrong. 1 mark also you will not get, because price at greatest aggregate quantity means not this. First see the price 100, 100, 100. At 100 rupees we are selling 3 quantities. Take that. At 100 rupees price, what is the quantity sold? 600. At 100 rupees price, we are selling 600 quantity. Then next, at 90 rupees price, how much is sold? At 90 rupees price, how much is sold? 650. Then at 95, how much is sold? 500. And at 105, how much is sold? 250. So what is the highest quantity? 650. At that, what is the price? 90. 90 should be taken. 90 should be taken, not 95. 90 should be taken. 90 into 500, how much? 40, 5,000 will be taken as the unit price at which greatest aggregate quantity is sold, minus post importation expenses, port to depot, insurance from port to depot, 10,150 and 1,250. How much? 33,600. But this will include customs duty also, correct? No, the selling price is exclusive of duties and taxes. So this customs duty is a trap. So what you will do, you will calculate customs duty on that and you will eliminate and you will see, but your answer will be wrong because it is already exclusive of duties and taxes. Okay, so 33,600 will be taken, and on that only you need to compute the customs duty. That itself is a value because that is exclusive of taxes, duties, etc. On that you need to compute customs duty into basic customs duty 12% and social welfare surcharge, and we don't have any IGST, so therefore it will be taken. What if this line is not given? The selling price is exclusive of duties and taxes, like that, not given. Then this 33,600 you will assume as inclusive of customs duty and you will calculate on inclusive basis. Okay. Then question number 43. Compute the assessable value and total customs duty payable under Customs Act for an imported machine based on the following information. Cost of the machine at the factory of the exporter 20,000. Transportation charges from factory to port. Transportation charges for loading the machine on the ship 50. What will be taken? 20,000 plus 800 plus 50. 20,850 will be taken as FOB value for customs. Correct? And thereafter buying commission not included. Light rate, yes. Freight from port of entry to inland container depot, no, it is post import. Ship demurrage charges, yes, part of freight. Freight charges from exporting country to India actually is given, we will take that. So here we don't have to do the adjustment, 20% of FOB. So therefore we will take regularly. So 200 plus 400 plus 5,000, how much? 5,600. So 5,600 will be taken. So therefore you will get the assessable value. What is the assessable value? And insurance also should be taken. What is the insurance? Not given. So 1.125% of 20,850, that is 234.56. Total will be 26,684.56. Bill of entry, entry inward is given. So which date should be taken? Bill of entry, 60 rupees should be taken. Convert into 60 rupees, you will get the assessable value. Clear pa? In this the special point is that ship demurrage charges should be taken and light rate charges should be taken and the freight should be taken, but freight from port of entry to inland container depot should not be taken. Actually I told you customs and all will not be difficult because all 4 marks questions only, they will give like this, simple questions only like 1 or 2 adjustments. Then question number 44. Skyleaf Imports Private Limited imported goods valued at 20 lakhs through a bill of entry presented to the proper officer on 15th July 2024 when the applicable rate of customs duty was 10%. The officer submitted all required documents. 1 second pa. I am like getting tired. Okay. Say this. So 5 more questions only will complete. Huh? Chocolate? It's okay. So say this, where the applicable rate of customs duty was 10%, the importer submitted all required documents, but the officer ordered a provisional assessment on 15 July due to the need for further enquiry. Provisional duty of 2 lakhs was paid. Later, the following occurred. 50,000 was voluntarily paid on 20th August. Final duty assessment was complete on 31st August with the total duty determined at 3 lakhs. The balance duty was paid on 31st August itself. What is the final assessment? What is the final assessment? 3 lakhs. What is the provisional duty? 2 lakhs. What is the differential amount? 1 lakh. How are you discharging that 1 lakh? 50,000 was voluntarily paid on 20th August. So you tell me for that 50,000 interest from which date to which date? What is the provisional assessment order? 15th July. 15th July and that date. So 1st July onwards it will start, correct? Whenever the provisional assessment order is passed, in that month, first date. So that is 1st July till the date of payment, that is 20th August. How many days? Sir, should we count 1st July also? Yes, yes. 1st July also should be counted. So July 31 days. August 20 days. So total, see the answer, 51 days. So we need to count from 1st of the month in which the provisional assessment is made. That should also be counted. So 50,000 into rate of interest 15% par into 51 by 365, 1,048 rupees. Next, the balance was paid on 31st August. What is the balance? 50,000. So that you need to count from when to when? 1st July to 31st August. So July 31 days, August 31 days, 62 days. So 1,274. So total 1,048 plus 1,274, 2,332 we need to pay. So I told you on provisional assessment, mostly interest computation only will come this attempt. This is like this. Next, suppose if it is refund per 3 months from the date of final assessment, we should get otherwise interest 6%. Look into question number 45. After staying abroad for 16 months, Mr. Vasudev shifted his residence to India from Sydney to Kolkata on 12/10. At the time of landing at Kolkata, he brought the following items. Gold bars 30 grams valued at 90,000. It is not eligible for general free allowance and rate will be 38.5% because it is gold bars. Gold bars. Then alcoholic liquor 4 liter, 2 liter eligible for GFA, remaining 2 liter not eligible for GFA 38.5%. That is 10,000 you divide 5,000 and 5,000. See the answer. Okay. Then 20 box of cigarettes, each box containing 10 numbers. So 20 into 10, 200. 100 will come under eligible for GFA, remaining 100 will not come under eligible for GFA. So therefore it will be 110%. So 2000 into 110%, but 2000 eligible for GFA. Because cigarettes exceeding 100, 110%. Notebook computer 1 lakh, exempted because more than 18 years. So that's not given, sir. That's not given. We need to take the assumption. Shifting his residence, Mr. Vasudev like that and all given. So definitely more than 18 years. Then next, one PC meant for personal use. PC is dutiable but eligible for GFA 40,000. And hand pistol 83,000 not eligible for GFA 110%. Definitely 18 plus. You are required to compute the customs duty payable by him. So eligible for GFA you take 47,000 total, correct? 40 plus 2 plus 5. And is he a person of foreign origin? No. So due to that reason 50,000 up to 50,000. So dutiable value will be 0. Actually he is eligible for transfer of residence. But in GFA itself he is eligible for transfer of residence, but in GFA itself it is accommodated. So that's why the transfer of residence point is not applied here. And what about not eligible for GFA? See, this 83,000 and 2,000 will be dutiable at 110% and remaining at 38.5%. So you need to compute the baggage duty. This is how you need to present the answer. Clear? Question number 46. Messrs. Bola Limited imported superior kerosene oil. This only I told you. Biaco Larry case. So I feel like it is important. They can ask a question. Based on that, this question is created. Messrs. Bola Limited imported superior kerosene oil valued at US $80,000 and stored it in a public warehouse. The exchange rate at the time of import was 70 rupees per dollar. An ex-bond bill of entry for home consumption was filed on 1st August. With basic customs duty at 10% applicable on that date. The proper officer passed the order for clearance for home consumption and customs duty was paid. Due to combustible nature of SKO, the importer requested continued storage in the same. Whether he paid the duty? Yes, customs duty was paid and they made a warehousing request until the actual sale or usage of goods application was approved. However, 15 September where the goods are actually removed from the warehouse, the rate increased to 12%. Initially it was 10%. Department demanded differential duty. What is your answer? No. So that is this. customs duty already paid is 80,000 into 70 into 10%. 80,000 into 70, 10% basic customs duty, social welfare surcharge 10%. So total customs duty 6,16,000. We don't have the IGST information, so not taken. And as per section 68, once the duty is paid and out of customs charge order is passed, the goods cease to be warehoused goods. Under section 49, if clearance goods are permitted to remain in the warehouse, they are not treated as warehoused goods. Referring to the case of Biako Lari, Supreme Court held that once customs duty is paid and a clearance order is passed, any subsequent storage does not attract the additional duty even if the rate changes. Okay. So they will be asking a question like this. Accordingly, remember this case name also. They will tell case name is not required to be written like that. Yes, they will mention, but you write because this case name you can remember and write. Then question number 47. Messrs. Stellar Industries Private Limited, located in Bengaluru, is a manufacturer operating under the Advance Authorization Scheme. In financial year 24-25, the company undertook the following: imported raw material worth CIF 25 lakhs duty free under advance authorization, received free of cost inputs from foreign client valued 5 lakh notional value, manufactured finished goods and supplied them to Blue Wave SEZ Kochi. Payment was received in Indian rupees through banking channels. Separately, Stellar Industries also supplied goods to UNICEF India office, New Delhi, receiving payment in INR. Answer the following questions based on FTP. Is supply from Stellar Industries DTA to Blue Wave SEZ an export or deemed export? What is your answer? Sale to SEZ. Sale to SEZ is treated as export. We discussed under advance authorization, either you can actually export, or you can make sale to SEZ, or you can make sale to foreign going vessel or aircraft. It will be treated as export. Do you remember that? If you want to check that SIT book, summary we discussed now, there I gave you export obligation. Either the export can be physical export, or the export can be, sale to SEZ, or the export can be sale to a foreign going vessel or aircraft, or it can be deemed export also. Everything will be counted for the purpose of export obligation. Is it clear? But it is not coming under deemed export, because for deemed export, sale to advance authorization holder, sale to EOU, sale to EPCG, sale to UN or international organizations, projects financed by them, sale to international competitive bidding projects, or sale to mega power projects, nuclear power projects, that is only covered under deemed export. Then, can advance authorization be availed if payment is received in Indian rupees? So here, advance authorization, how the consideration should be? How the consideration should be? Convertible foreign exchange. But in these cases, wherever it is permitted by RBI, I told you it can be in Indian rupees. So here it is permitted. Sale to SEZ is permitted for Indian rupees. Even sale to foreign going vessel or aircraft permitted for Indian rupees. When it is in Indian rupees, what we should do? We also discussed this point. We should be converting back into foreign currency as on the April 1st of the current financial year for determining the star status. Do you remember? There we have seen. So see the answer. The supply is an export and advance authorization is available even though payment is received in INR. Next. Second, what is the minimum FOB value? 15%. Very good, sir. How much is this AF value of import? 30 lakhs or 25 lakhs? 30 lakhs. Even notional value of imports given free of cost by the buyer should be included. So 25 lakhs plus 5 lakhs, 30 lakhs. On that 30 lakhs, 15% you should achieve. So 34 lakh 50,000. Got it? Next. Can Stellar Industries claim advance authorization for supplies to UNICEF India office where the payment was received in Indian rupees? Supplies to international organizations are allowed under authorization only if the payment is received in foreign exchange. Hence, since payment in rupees, condition not fulfilled. Therefore, Stellar Industries cannot claim advance authorization for this supply. Okay. Next. Look into question number 48. So the central government is in the process. Sir, won't it come under deemed export? No, pa. Only projects financed by UN organizations is eligible for a deemed export. It is not a deemed export. It is not a deemed export. It's not given there. It's not given there. So what is given? They have given first export or deemed export or supply to SEZ or sale to foreign going vessel or aircraft, that only. In all other cases, you should have really exported it and you should have realized the proceeds in convertible foreign exchange. In this place only it is permitted by RBI, where it can be in Indian rupees, wherever it is allowed. What is allowed? Deemed exports, sale to SEZ, sale to foreign going vessel or aircraft. Question number 48, the central government is in the process of drafting an amendment to the foreign trade policy. During this process, it circulates a draft for stakeholder consultation and provides them 30 days for feedback. Global Exporters Association submits detailed suggestions. It's an RTP question pa. On the same, the government acknowledges receipt of their suggestions, but in the final amendment, these recommendations are not accepted. I told you, stakeholder consultation, like that one question is there. GEA requests the government to explain why their views were rejected. The ministry provides a brief explanation stating that acceptance of suggestions would conflict with India's international obligation under a trade agreement. Separately, another association, Fresh Food Exporters Forum, also submitted views relating to said amendment. Their suggestions were not incorporated and the government did not provide any reason for the rejection. Based on the above mentioned information, you are required to answer the following. Is the central government obligated to always consult stakeholders before formulating or amending FTP? No. No, it is not compulsory, it is up to them, okay. Not obligated, but if they want, they can seek the stakeholder consultation. Whether the action taken by government for rejecting the proposal of GEA and giving only limited reasons was valid? Yes, yes, because there are some cases where they don't have to disclose why they are rejecting. So therefore, see this. The government is valid in rejecting the proposal because the feedback not incorporated, and this issue is what? It is going to conflict with India's international obligations under trade agreement. So because of that reason, they don't have to give the explanation also, or they can reject. Can FEF demand government to legally disclose the reasons for not accepting its feedback? No. No legal right is conferred. No legal right is conferred on them, and they cannot file any case or litigation against them stating that they have to disclose the reason. And these are the cases where government is not required to provide the reasons for rejection. It is going to affect the trade relation, affect the food, economic and national security, conflict with government policies, or like any public interest, border public interest, would require the disclosure of confidential or classified information, all those things. Question number 49. Suhasi Electronics Private Limited, an importer who availed the benefit of the notification, imported the raw materials for manufacturing LED panels. No condition or time period has been specified in the notification in relation to re-export of unutilized or defective goods so imported. The goods were imported on 10 February. However, a small portion of the goods received were found to be defective and remain unutilized due to production shift in the company. Suhasi Electronics approaches you to obtain advice related to the defective and unutilized goods. Tell me whether they have to re-export these unutilized or defective goods? Yes. Import of goods at concessional rate of duty rules. All imported goods under these rules should be exported if it is defective or unutilized within 1 year, and it can be extended for a further period of 3 months. So we discussed that part, a latest amendment, the chart we discussed. Unutilized goods should be exported within 1 year, and it can be extended for a further period of 3 months if sufficient reason is shown. Then if yes, what is the maximum permissible time period that can be done? So either they have to re-export the unutilized goods, or they can sell in India upon payment of applicable customs duty with interest. What are the conditions applicable in case of re-export goods? If they are exporting it back, the FOB value of that good should be more than the CF value at the time of import. So the re-export of unutilized or defective goods shall be recorded. The value of such goods for re-export shall not be less than the value of said goods at the time of import. If Suhasi Electronics chooses to clear the goods for home consumption, explain the procedure for the same. So it can make a voluntary payment of applicable customs duty along with interest. The details of such duty payment and clearance must be disclosed in the importer's quarterly statement. Again, this is an RTP question, not tested. Okay. So last time they have asked, but that was in a different context. So this point they can make. Last question. Mr. Frederick imported second-hand goods from a supplier in UK by air, where a CAF contract, under a CAF contract, as a part of the transaction, vendor inspection charges amounting to £600 were incurred. This inspection is carried out by the foreign supplier on his own and were neither contractually agreed nor essential for making the goods ready for shipment. Definitely it will not be included. Because see, first of all, it is incurred by supplier on his own account and it was never charged to recipient. When it is never charged to recipient, why it will be included in the value? It will not be included in the value. Additionally, a commission is payable to a local agent in India. Local agent means exporter's agent. Exporter's agent calculated at 1% of FOB in the value of Indian currency, that should be included. Local agent's commission should be included. The bill of entry was filed on 18th February, on which date the basic customs duty is 10%, exchange rate was 102. So take 102 as the exchange rate. Aircraft arrived on 15th February. So 18th February, 15th February, whichever is later is 18th February. So therefore we need to take 10% as the rate. And the interbank exchange rate irrelevant. However, the transaction underwent multiple price revisions due to fluctuations in international market between the date of contract and the actual importation. Eventually, both the parties settled on a negotiated price payable as follows. So CAF value 5,500, contract price, changed price, negotiated price, air freight, insurance. Compute the assessable value of second hand goods. Listen pa, what is the price prevailing at the time and place of importation? Negotiated price. So therefore negotiated price is relevant. Got it? So the transaction value will be CAF price, which is prevailing at the time and place of importation. In this case, since the contract was renegotiated and the importer paid the renegotiated price, the transaction would be such renegotiated price and not the contracted price. So therefore this 5,500 will be taken. Based on comparable transactions, can this negotiated price be rejected by the officer? No, because I'll tell you. He can reject it, but there should be sufficient evidence for rejection. The comparable imports should be such that the contract was entered at that time, but it is imported now. But if the contract is entered now and imported now, that cannot be taken as the comparable transaction. You got it? So 5,500 can be taken, and freight and insurance 500 and 600, and even this vendor inspection charges, will it be included or not? No, local agent's commission will be included. And air freight is given. Air freight is given. So what we need to do? We need to take actual or 20%. So be careful. Don't take this as FOB. This is CIF. So first to take out air freight and insurance, you will get the FOB. So 5,500 minus 500 and 600, you will get the FOB value 4,400 pounds. Understood? Don't blindly take 5,500 and do the computation, because this is air freight. So separate that. You will get the FOB as per invoice. Now you need to make the changes. Vendor inspection charges not included, but local agent's commission included, 1% of FOB, that is $4,400. $4,400. If you convert into Indian rupees at exchange rate 102, 4,48,800 into 1%, 4,488. Then you will get FOB as per customs. To this FOB as per customs, you need to take freight. What is the freight? Actuals. What is actuals? Please do the computation. 500 into 102, 51,000, or 20% of FOB, 4,53,288 into 20%. Somewhere more, correct? Whichever is lower will be 51,000. Insurance actual ascertainable, take actual. So 600 into 102, 61,200. So we get the assessable value. Understood pa? What are the special points in this? That is, negotiated price should be taken. Vendor inspection charges not included because it is incurred by supplier on his own account. And we need to first deduct the freight and insurance to get the FOB, because air freight is given. Then the air freight should be restricted to 20% of FOB calculation to be done. And only basic customs duty is given. So social welfare surcharge we need to add and the customs duty rounded off. Clear? So with this we completed Mighty 50 and our rocket revision also. Okay. Thank you for patiently attending and listening to the classes. And apart from this, what are the important theory questions? While discussing, I told you that what are the important theory questions that you need to do like that. So that you take. Apart from that, don't worry, I'll give you the probable areas also as a sheet. So those areas you need to focus, like a checklist you keep, so that one day before the exam, ensure that you are covering all those things and going for the exam. Fine. You can. Face to face students, just wait for some time.